welcome you all to our today's seminar on income tax, GST and customs, shaping India's future. I request the chairperson of the National Fiscal Affairs and Taxation Committee of the Bengal Chamber of Commerce and Industry and partner Tax Connect Advisory Services Limited, Mr. Vivek Jalan, to please be on the dais and deliver the welcome address.
Thank you, Sharbani. Good morning to all the participants, first of all, for joining. Welcome to Principal Chief Commissioner, Sir, Mr. Shravan Kumar, Special Commissioner, Ma'am, from SGST Department, Senior Joint Commissioner, Guria, Sir, all the speakers for today, and ladies and gentlemen. Thank you for joining on this yearly tax event from Bengal Chamber of Commerce and Industry. Friends, today India is at the cusp of 2.0, I would say. Today we as a country are resisting international pressure to prevent and protect our sovereign dignity, and all measures are being taken by central government and state governments together to ensure that India, which is a bright spot globally, remains a bright spot and becomes much stronger in the wake of global headwinds. In these times, it is very important that trade and industry also go hand in hand with the government. In fact, the government's engagement today with trade and industry is at an all-time high. Regularly, we are seeing government communications coming. Taxation in corporates is also at the cusp of a revolution. We have just seen yesterday at 11 p.m. the 56 GST Council meeting has ended, where it was 2 days, it's ended in 1 day, and it has unleashed GST 2.0, which would come very soon. We are seeing a revolution in income tax with the new Income Tax Act 2025, and regular improvements and changes in customs. For CFOs, CEOs, and tax managers, it is very important that the benefit of all of these changes in taxation flows down to the business as well as to the consumers, and we together work upon and propel India's GDP going forward. Today, we'll have many technical sessions with many speakers from our National Fiscal Affairs and Taxation Committee. We will start with government's session, where we have officers, very senior officers from GST. We'll have senior officers from customs as well as from income tax also going forward. So thank you again for joining today, and looking forward to an intriguing session and an engaging session with all of you. Thank you very much.
Thank you, sir. I request the dignitaries to please be on the dais. The chief guest of today's seminar, Mr. Shravan Kumar, IRS, Chief Commissioner of CGST and Central Excise, Kolkata, from Central Board of Indirect Taxes and Customs, Ministry of Finance. Sir, we request you to please be on the dais. I also request other dignitaries to please join us. Srimati Nilima Mondol, Special Commissioner of Revenue, Directorate of Commercial Taxes, Government of West Bengal. Ma'am, please join. And Shri Narayan Chandra Guria, Senior Joint Commissioner of Revenue, Directorate of Commercial Taxes, Government of West Bengal. Sir, please. I request the chairperson to please take the session forward.
Thank you once again, Sharbani. So Friends, this session, we'll have an all GST session, and we have the who's who of West Bengal GST with us. So without taking much time, the way, sirs and ma'am, how we'll regulate this session is we'll have 5 minutes where you can kindly share your views with trade and industry, and thereafter we'll have few questions from the Chamber, National Fiscal Affairs and Taxation Committee, also from the audience as and how it comes. So, sir, at the outset, I would request Shri Shravan Kumar, sir, to kindly deliver the initial address to the audience.
Good morning, friends. Bengal Chamber of Commerce and Industry has been requesting me to come and have an interaction with the members and all of you for the, I think, last 1.5 years or so, and on 2-3 previous occasions, because it happened so that I was out of station or something else happened, I could not come. And finally, when I came, today when I'm able to come and interact with you and address your queries, this day is has become so important by coincidence, because yesterday you all know that there have been announcements on GST fronts which are going to have far-reaching effects. It's as Mr. Vivek mentioned, it's a GST 2 kind of situation where not only rate rationalization, which was a long pending demand of the industry, that the rate rationalization is required because similar types of goods and services they supply, leading to classification issues and disputes. That was one of the need, and now we have got the rate rationalization to a very large extent. Now you have effectively two main rates, 18% and 5%. Bulk of the goods are covered in these two categories. Minuscule goods are there, which are in the kind of sin category of goods, to say that, are in 40%, and some precious metals and diamonds like things will be in 1% or something like that only. So effectively 98% of the trade, I'll say, is now covered under these two categories. So the disputes relating to classifications, I think, are now will be things of the past. And not only rationalization of rates, if you have seen the announcements and the ATP's documents which is circulating in the trade given by the GST Council, it has also addressed certain issues on procedures as well as on institutionalization of the things. I'll briefly mention about that. See, 97% of the trade is concerned with the three basic processes with the department: taking registration, assessing your liability and filing your returns, and in case there is excess payment, claiming a refund of the same. These are the three processes with which 97% of the taxpayers are concerned. Less than 3% are the taxpayer with whom we interact during the process of compliance verification through either scrutiny or audit or anti-evasion mechanism. So out of these three basic processes, in two processes there have been significant changes. For taking registration, one of the issues, many a time taxpayers had issues, though we have tried several significant things to make taking registration a simple and effective process, but still there are issues. So the government has now come up with a simplified process, that in case a normal taxpayer who is having nothing, see, we are concerned only because there is a menace of fake invoicing. That is why we are having certain reservations in making the processes extremely easy and user friendly. So we have to take that into account also, that somebody takes a registration and in 2 months issues bills worth hundreds of crores, and these are all fake bills, and the credit is passed, and then it moves through a web of companies and registrations, and then it goes to somebody in different states. It becomes very difficult to actually take actions against all of them. Because of that, now what government has done, that in case your monthly liability is 2.5 lakhs or so, then within 3 days of your application, the registration will be automatically granted, which will cover again 95, 96 or maybe more than that percentage of the taxpayers. Because most of the taxpayers in the beginning, and those which are established companies, in any case they don't have much issues. But the small taxpayers will have this benefit of getting the registration within 3 days. Similarly, in the refund also, 90% of the refund is to be given within 7 days. That is also one of the other simplified mechanism put in place. In addition to that, GST tribunal is one of the requirement and one of the demand of the industry, and last 1 year we have been struggling to put it in place. Now almost everything is in place. In Bengal, we have identified a place in Alipur. That place is now ready completely. We have kind of refurnished the whole place, and members' appointment has happened. The GST Council has now informed that from the end of this month, filing of appeal before the tribunal will be open, so the appeals can be filed, and the period will be available till June next year. So till that time, whatever appeals will be filed, there will be no time bar, even if the orders were passed 1, 2, 3, 4, 5 years back. So that is one thing which has been announced. And second thing is that the members will start hearing of the appeals sometimes in December. Because appointment has happened, they are required to join by the end of this month. After that, there is some 2-3 weeks training the government has planned for them. And by the end of October, they should be getting assigned different benches. And in a month or so, they should be start hearing. So in December, they will start hearing the cases. So this demand of the industry is also more or less now fulfilled. So I think, this is relating to the GST Council decisions, and a lot of other things are there. I would expect that the queries which you have in mind, or the doubts you have, or the issues you have, personal issues or industry issues or whatever it is, I think we will then interact and take them as it comes. So thank you very much for inviting me and for giving me this opportunity. Thank you.
Thank you, sir. Sir, before going on to the questions and answers, I would invite Nilima ma'am to address the gathering. Whatever.
The Chief Commissioner of CBIC, the members of the Bengal Chamber of Commerce and Industry, and our valued taxpayers. It is a great pleasure and privilege for me to be here with you today at this important seminar. This gathering is very special for me because it brings together some of the biggest contributors of GST and income tax in our state. Today, I would like to acknowledge and appreciate your significant contribution to the economy of West Bengal and India as a whole. Your investigations, your innovation, investment, hard work have not only created the employment beneficiaries and opportunities, but also boosted infrastructure and development. West Bengal has been showing steady progress in GST collections. Last year, we have achieved 11.4%, which is 2% more than our national growth of GST. Even this year, we have achieved 8.4% growth in SGST, which is very close to the national growth of 9.9%. This achievement would not be possible if you would not cooperate with us and for your constant support and timely compliance. As the head of the large taxpayer unit of the Directorate of Commercial Taxes and State GST of Government of West Bengal, I sincerely thank you, each one of you. By paying your taxes honestly and on time, you are not only fulfilling your legal duties, but also helping to build a stronger West Bengal and stronger India. I would also like to request to avail the scheme of settlement of dispute tax 2025 that has been newly introduced for settlement of the backlog dues and to avail the scheme. Please submit your application by 30th September 2025. Now, with the GST 2.0 and new reforms of income tax on the way, we have both opportunities and challenges before us. I request your continued support, suggestions, and active participation so that we can go ahead together. Let us join hands to create a most robust taxation, a stronger state, and more vibrant nation. I must thank the members of the Bengal Chambers of Commerce and Industry to invite me in this seminar. Thank you all.
Thank you, ma'am. I would request Guria sir if you can address the gathering.
Good morning. Good morning, sir. Good morning, ma'am. First, I want to thank BCCI for organizing this seminar because I believe that this type of seminar not only to enrich us, also it will build a stronger bond between the taxpayer and the department. So basically, as per the schedule, I am supposed to say regarding the adjudication, the issues relating to the adjudication you are facing by the state authorities. So in that case, that Sarah has already mentioned that out of that 7.5 lakhs of taxpayer, we are basically selecting taxpayer for audit and scrutiny is less than 3%. It is ranging from 2% to 3%. But I think all the members present over here, they are somehow covered either by the scrutiny or adjudication or audit. Am I correct? So that is the pain is always there since you are the big taxpayer over here. But I'm giving the exact figure. In our state, in the last 3 years, we have audited more or less 1,000 to 1,200 taxpayer out of 4.5 lakhs. And in scrutiny, it is on an average of 10,000 per year. So if you concentrate on so most of the adjudication that is coming from either scrutiny or audit. apart from that, you know, that enforcement process. So I'm talking about this section 73 or 74. This is basically coming from this audit or from scrutiny. In case of scrutiny, there is a very limited scope of penetrate into the deeper in your books of accounts. Am I correct? So that is basically the arithmetic accuracy of your submission. That is the Savan Kumar sir already said that in GST, majorly the compliance is in form of self-compliance by submitting your return in GSTR 3B, mainly in GSTR 3B and GSTR 1 accurately. So if there is any deviation from your 2A or 2B, it's our suggestion or advice, please don't neglect, please keep one elaborate reconciliation in your hand. Because since you are big taxpayer, large taxpayer, so you will be selected for either for scrutiny or, and this deviation is very normal. There are, since those who are basically doing the fair business and your return is the reflection of your fair business, there should be deviation. There should be difference, much more compared to the taxpayer, who are in a planned way, basically trying to defraud the government exchequer. There will be perfect mismatch. So in that case, to relieve your pain, it's our advice to keep a elaborate, reconciliation in every stage, because in most of the time, since you are facing the adjudication of the financial year 2021 and 22, your concern is that most of the adjudication are basically, so in our state, you know that before adjudication, we issue DRC 01A, that is your pre-adjudication notice in 100% case. So there may be one or two deviation, but in most of the cases, basically your adjudication process is started before adjudication process, DRC 01A is there. But your concern is that the time is provided to reconcile in this DRC 01A is not sufficient. Am I correct? The department is allowing time, a very short time. One. Second is that the pain was there before pre-GST, both in service tax and also in VAT. That is the disallowance of ITC or SENVAT credit. That issue is not new. That is also continuing. The legacy is continuing in GST also. That is the major pain in your adjudication is the ITC. Am I correct? And ITC, particularly the provisions of 16(2)(c), that is the supplier is failed to make the payment, or the registration of the supplier has been cancelled on a later day of your purchase, and it suddenly on a retrospective effect. This is the main concern. But what is the stronger point on your part? Because you are having a very strong judgment of the Honorable Calcutta High Court. So that is that, you know that I am talking about that Suncraft Energy Private Limited case. So in that case, the court has held that a genuine taxpayer should not be denied from his legitimate claim of ITC. Am I correct? So only the registration has been cancelled on a post date, and that the supplier has not made the full payment of your tax. Only for this reason, the department is not in a position to disallow your ITC, correct? But at the same time, if you concentrate on that Suncraft judgment, you will find that if the transaction is not bona fide, or the supplier is non-existent, or your purchase is basically a paper purchase, not the actual movement of goods and services are there, then department is in a position to recover the dues. So please be careful. I am actually want to highlight the principle that is adopted by the court, that protection of the genuine and the debtor, penalty in respect of the fraudulent. That was the basically, you know, that principle of the court. Now this is our assurance to the department is that, yes, this point is a serious concern to us also, that many cases you are not allowed the sufficient time in DRC 01A. So we are involving the higher authority to fix the so that department can basically control the tax, tax officers to allow a minimum time to reconcile your differences before issuing DRC 01A in future days, that is from 2022 and 23. And if your purchase is genuine, definitely your ITC will not be denied. At the same time, I want to basically request you to please bring your attention to important things. We found that Sarah has also mentioned, that in the beginning, there was only one simple page of GST return. There, every page was, that can be filled by you. There was no auto population. There was no, that filter. So because that GST was a full trust on you, we believe you, we trust you. But in days, we found that every day, there are numerous number of registrations are coming, and they are just waiting. And on a certain day, we found that a new taxpayer, that turnover is more than 100 crores, 50 crores, 80 crores in a month, and sometimes more than that. And so it's very difficult for us to, to recover all these dues from the beneficiaries, because most of the cases the beneficiaries are not in our jurisdiction, that is in other state. So in that case, so please apply your due diligence when you are basically procuring some goods and services. I'm repeatedly again saying that please use your utmost diligence when you are choosing your, that vendors. That is most important. And second more thing is that nowadays we found that some of the taxpayers, they are basically using Rule 28, that valuation between the distinct persons, in a way so that they are basically planning their, that ITC should be flowed to the states where there is a cash demand for payment of tax. So what is the intention of the legislature when Rule 28 is formed? Basically, I am talking about the second proviso of the Rule 28, where it is mentioned that if it is supply between distinct person and the recipient is eligible of full input tax credit, in that case, whatever value you have declared in your tax invoice, that will be treated as the deemed market price, okay, open market price. So why that intention was the legislature, that since the supply between the distinct person in pre-GST era was basically exempted. There was no tax. A simple form was there, a form. But in GST, it is under the taxation. So in that case, it's a capital blockage. So minimize that capital blockage. Whatever the value, the lower than value will put, that will be treated as the open market value. But in present days, the scenario has been reversed. Suppose you have huge excess ITC over here in West Bengal in form of CGST and SGST, the taxpayer is raising, that invoice for 25 lakhs, it is making 25 crores. In that way, that ITC is flowing to the destination state where there is a, that if it is not flowed, there will be a cash liability for making payment of those days. So it's basically the destination principle is hampered. So in that case, our request is that please don't do this type of tax planning. This will actually hit the state exchequer and also the central exchequer very badly. Because the IGST is not the tax of central government or the state government. It's only a credit transfer mechanism. Only the CGST is the tax of the central government and SGST is the tax of the state government. So when you are using your CGST ITC or SGST ITC for making payment of your IGST, it's basically hit the state exchequer as well as the central exchequer. And it's basically enriching you for minimizing your cash demand in that state. And in this, when this GST 2.0 is coming, there is a sharp slash down of major goods from 18%, 12% to 5% or 0, and from 28% to 18% or 5%. In that case, there will be a huge accumulated ITC over here. It's very natural that the trade or the industry should, that they will definitely, since if the excess ITC refund is not allowed, in that case, that will be their cost. That is no, definite. But don't make this type of planning where the state government will be loser. That is one thing. And Sir has already explained nicely that this GST 2.0, so since it's a major change, and tax researchers are saying that it will be a new era in GST. So if it is new era and new change, and definitely in favor of the industry, I believe. Sir also believes, we believe. But always the change is painful. We are very accustomed with the the normal flow. When there is a downstream, so it's very painful to both of you and also the tax officials. So we are on the same board. So if it is a newborn, what do you expect? The baby will cry or laugh? Always in case of newborn, the baby will cry. So it is our duty to make the baby walk, to make the baby laugh. Thank you very much. Thank you.
Thank you, sir, for the energetic presentation and the new insights. So we'll start our question and answer session, sir. I have two, and then we'll open up for the audience. Sir, first. No, sir, from the Bengal Chamber, members keep on answering, and we keep on questioning you even in the raising before you in the GST redressal, grievance redressal committee. So two things, sir. I will not raise the policy issues out here that members can always raise, but on the field, what is happening, at least in West Bengal, two things on the central GST front, sir. Number one, we receive, many of our members, they receive notices. Many of the notices are reconciliation, e-way bill versus GSTR 1 versus 3B. But the backup data is not there. We just receive one notice, one figure 1 and one figure of 3B. Now we have to go back and all, if the backup data can be provided along with the notices. And number two is this state-wise trial balance. Since most of our members, they are on the last taxpayers or MSMEs also. State-wise trial balance, now members are preparing some way. No, it is not possible for very large corporates to prepare it seamlessly. But there should be a way that entire pan-India figure should not be taken under demands to should be raised just because there is no state-wise trial balance. So maybe a CA, CMA certificate or something, a parallel can be brought up. These are the two things before you, sir.
See, mostly, these notices are arising because of the audit of the taxpayer, or sometimes maybe in scrutiny. Now, I mean, one of the what should I say, adverse effect of the GST is also that department has almost all of your data. So all your returns are there, invoices are there, balance sheet in any case is a public document. It is quite natural that you suppose you have shown in your GST returns certain turnover on which GST has been paid, and your balance sheet shows a different figure. The department does not have any other data. It will ask you that why this difference. In case you have a reasons that there is a sale of land, or some other, there could be many other incomes or streams which are part of balance sheet, but which are not liable to be GST. So that explanation or that the reconciliation has to come from the taxpayer only. And audit, etc., generally they start by all these documents and then they ask, and if there is no response coming from the taxpayer, then they get away by just getting a show cause notice issued. So department, I mean, how, from where the department will give the backup data? Backup data has to be given by the taxpayer in case there must be some reason. If there is no reason, then the department will assume that part of the things you are, in one document which is being accounted is not being accounted in the GST returns.
No, sir, if it is coming in the notice, maybe auto-generated, but doesn't the GST department software have the backup data? Because many times, specifically in e-waybill cases, we see what our data is vis-a-vis what figure is there is a mismatch over there. So
See,
first,
one thing could be that the department while calculating makes mistake. It doesn't take all the e-way bills, and that's a clerical error, or maybe error of the person concerned. It's not a error of the system. So that is an individual issue where some officer either purposefully, deliberately, or maybe by accident, or he just ignorance, or he missed certain things, and he calculated a wrong reconciliation and says that there is a variation. Let's not go into that, because that's an individual issue. But generally speaking, when there is a variation in your turnover in different the returns or different documents, then the department asks it, and after that, if there is after a reasonable time, if there is no response. Now, recently a case came to my notice of one of the big company here in Bengal, which has been actually given a show cause notice of some 75 crores by the audit. I mean, it seems they don't believe that this much is their liability, so, and it's quite a renowned unit. So, but when I checked with the audit, when this issue and kind of complaint or grievance came to me, I asked the audit party that how did you issue this show cause notice, and why, what is the response of the taxpayer, and did you take that into account while issuing it? Because that is how you arrive at a figure, that you have raised certain objections, taxpayer has given certain clarifications, did you take those clarifications into account or not? That is all. Beyond, even after that also there could be a difference of opinion, and then that will be mentioned in the show cause notice, and subsequent adjudication proceedings will take care of that. So then they came forward and said, sir, we have issued 3 different letters on, after a week or 10 days gap, and since there was no response, we went ahead with the audit meeting, and there we approved the whole thing, and we issued the show cause notice. Now certain clarification has come, but since the notice has been issued, we can't do, it will be taken care of by the adjudication. What was the second question?
so second was this state-wise trial balance, and the pan-India figure being taken and a demand being issued in West Bengal. Can we have a CA certificate or CMA certificate?
Yes, so I think we can take this maybe in the next grievance committee and find a solution that how should we, you should suggest certain way how to go about it. I mean, it's a reasonable point, but कैसे हम उसको आगे ले जाएं? Let's discuss that and we'll find a solution.
Right. Thank you, sir, for that. Ma'am and sir, one question for you. Sir spoke about Suncraft Energy case, for where the court has said in genuine cases, physical verification should be done at the supplier's premises before raising a demand on the recipient. Can this same thing be done in case of credit notes? Sir, credit note, yesterday GST Council has clarified big changes coming, circular 212 is being withdrawn, but at least for the past cases, sir, many times we see that, members, they see that credit note has been raised on them and they don't know, number one. Number two, they also inquire with the customer, but he doesn't revert to them. So maybe physical verification, if the department asks them, you give me a disclosure, then they will respond.
In case of credit note, basically the issue is that 2 issues. One is that if you issue credit notes under GST, in that case, your output liability will be decreased to that extent. But the condition is that the recipient has reversed that ITC. But in most of the cases, we never asking these taxpayers, the suppliers, to basically establish that the recipient has reversed that ITC. It's very difficult for the part of the taxpayer, and also very difficult from the part of the tax official to verify each and every case. If it is a supply within the state, that is interstate, So in that case, what we are doing, we are basically asking the recipient that you have this, those are the suppliers, those who have issued the credit note under the GST, whether you have, basically reversed your ITC or not. I think that is prudent. In that case, if any recipient, some of the recipient, they are arguing that these are not our credit notes. In that case, we are bound to basically to take action in respect of that supplier when it is within the state. Okay. So I'm taking, just giving example of one of the credit note issues. A second credit note is regarding that, the commercial credit note, which is not under the GST. That may be for different reasons, for value protection, for, that any postal discount which is not covered under the GST, there or any type of, that your incentive or like this. So in that case, when any recipient is receiving this commercial credit note, sometimes the department or the central and the states, they ask the, recipient of this credit note whether there is any underlying supply from your part for receiving this credit note and whether it is in form of your consideration or not, that is. So in that case, the officer is supposed to establish that, yes, there is one underlying supply from the principal to this recipient, that there is an underlying supply of, business support service or sales facilitation service like this. In that case only, we basically raise demand, considering that this credit note is a type of consideration in respect of that outlying supply of services. That is the issue. Basically, Sir already told that some of the part will be covered under this circular. Maybe if there is any suggestion from your part, we are here to hear you. If there is any suggestion in respect to the commercial credit note part, basically.
Sir, many suggestions are there because we have been raising it in last 1 year from the Bengal Chamber, specifically for the traders. And I think there will be a circular as per the GST Council press release. So because if there is a service from my customer, then great, he will issue a service invoice. Only that identification of whether there is a service or not. If I am saying it is a post-sale discount, then I should be trusted. That is only our.
I think GST Council has also taken care of both these issues, post-sale discount and credit note issues. So at least now onwards it would be smooth sailing. For the past, if there are issues, we can take up and resolve them. But आगे के लिए तो at least now it is clear on both the issues.
That's really helpful, sir.
Presently, if the supplier issues credit notes, then automatically the credit ledger of the recipient is debited at this time.
Yeah.
So in the 2B part, that is already taken care of.
Yes,
And
yes.
whether
taken
there is
care.
any suggestion that to link the invoice with this
No,
commercial?
if taxpayers are trusted, then no linking, sir. Because linking again, it will open another Pandora's box. No, but
Presently it
if
has
taxpayer
been
is,
linked.
if I am saying it is for discount, it is a discount simpliciter. That should be accepted. That is the only request. Okay, so members, yeah, Shomik has a question from L&T.
Good morning, sir, and good morning, ma'am. First of all, thank you. First of all, I would like to extend my heartfelt thanks for your wonderful cooperation during the audit process and adjudication process. Sir, I'd like to raise two questions specifically. One is, sir, this invocation of Section 74. So this has become a very rampant issue. Whenever this Section 73 time limit exceeds, so we have been issuing the notice under Section 74, and that too on very trivial issues like e-waybill reconciliation, then taxable turnover reconciliation, ITC reconciliation. I think, sir, with that, I think some kind of thinking has to be done, especially the learning part of the adjudication officer, or any kind of internal circular can be binding, so that Section 74 can be avoided, because that 100% penalty and all these things happens. So that is our request. And the second part is, sir, with respect to ITC reconciliation, there is a component called ITC reclaimed, which is appearing in section in table 6H of the annual return. Although now it has been separately mentioned in GSTR 3B, earlier it was not there. So while issuing the notice that reclaim ITC can be excluded because it is a very inflated figure when the difference of 2A and 3B comes. So that figure, when the tax officer issues the notice, that reclaim figure, that reclaim figures can be excluded. So otherwise that demand amount is coming to a hefty amount. Some officer considers this reclaim amount, some do not. So that is a part. And my third question with respect to this All India balance sheet, what Mr. Jalan has mentioned. See, somewhere we also facing that the consolidated amount is getting a tax levy or demand. So going forward, one is the CA and CMA certificate. Second part, going forward, we can think of the PAN-based audit. Now GST is centralized. Why not the PAN-based audit so that the All India balance sheet can be addressed at one place? So that is a future going forward. So that we can, we already have made a representation before the Ministry of Finance from L&T side. So that if we can address, sir.
Okay,
So
one by
question,
one.
and question 2 and 3 are basically suggestions. So what you mentioned, and yes, they are good suggestions. I'll just see that what way we can implement them properly. You already mentioned that on question 2 there are some officers who are accepting it, some are not accepting it. So that means it's a basically implementation issue. So we will take that into account. How should we, make it universal? The first question which you raised regarding notices being issued under Section 74. This, yes, I accept that this is a challenge. This has been a challenge. We acknowledge that there has been an issue. और उसका reason ये है कि when people go for audit, they observe that there has been certain non-payment or short payment, or there has been certain issue जो taxpayer ने comply नहीं किया है. Then they, in order to cover the longer period that it is continuing for 5 years, so in order to cover the 5 years period, they have been cases where they invoked Section 74 even though there were no ingredients present to invoking of Section 74. We realize that there is a problem. We have been impressing upon the audit officers that we should not be invoking unnecessarily this, but the problem persisted. That is why in the last budget, now it is 2 years, from 1/4/24, we have introduced Section 74A. And Section 74A, so last 2 years it is now, after a year or so, 73, 74 का relevance रहने जाएगा. 74A में, whether it is suppression or no suppression, the time period available is same. So there this tendency to invoke extended period would no longer be there. So we have tried to address this issue through legislation, and we are also trying administratively to impress upon the officers that unnecessarily don't invoke Section 74. But what happens, sometimes the officers invoke just to avoid being questioned later on that when this non-compliance was there for 5 years, why did you not invoke the extended period? Sometimes, there are vigilance departments within the departments who unnecessary question. So because of that, there have been this issue. But I think after Section 74A, which is already in operation, and after a year or so, 74 and 73 will no longer be relevant, then this problem will automatically be taken care of.
No, sir, just one point here. That is the time barring part, but the penalty arbitrage, that is also there, sir. Even 74A, there, as you rightly said, that officers have to be sensitized. Just because more penalty is there for extended period.
The reason for invoking extended period is not for penalty. It is always to cover maximum period, because this non-compliance was there, and audit officers thought that if they don't do this, they might be questioned, which never, I don't think it happens, but the tendency is because of that. Not because they want that taxpayers should be penalized more. I don't think, maybe in isolated cases that could have been a reason, but not in a general case.
Right. Sir.
So from the state perspective, that we are very hesitant to issue notice under Section 74. If there is no mentionary is established before issuing the notice that there is a deliberate evasion. So in most of the cases, from audit or scrutiny, whatever may be, we basically issue 73, notice under section 73. If there is any situation that there is no mens rea or deliver a deviation of tax, so but the 74 has been issued, please bring to the notice of our commissioner. Definitely we'll take care of it.
Thank you. Yeah. Kindly introduce yourself and point out to whom are you asking the question so that. Your amnesty scheme for service tax and excise.
That was SVL DRS was brought 4-5 years back. So now most of the show cause notices under service tax and excise have been adjudicated. So you want a scheme for the cases which are in appeals.
Yes, sir. Very, sir, 30 years, 40 years old cases, even, you know, from the consulting, we also don't want to take up.
So
because
we will take this up. I mean, the right person to address this question is Finance Minister, because ultimately she will take a decision whether because 5 years back this scheme was brought, and I don't think most of these notices will be of last over 5 years only.
हाँ हाँ उसके भी पहले का है
नहीं,
सर.
उसके पहले के तो अभी इसी एक्साइज एंड सर्विस टैक्स 2017 से it is not there. So I don't think that those people who did not go for SVL DRS in 2000 will now go for I mean that percentage we don't know. But I'll just see that whether we can make this suggestion and maybe let's see. Yeah.
Priyanka, you can write to us, to Shorbani from the committee. We'll represent on this. Anything, any other member? Okay. Sir, हाँ, yes sir, please sir. हाँ.
So one more issue, there may be notices from the state that if there is any, you know, lapsed ITCs declared in your table 8D of GSTR 9, the tax officers may request you to basically disclose the same in your, table 4D of GSTR 3B, okay? So in that case, if it is a lapsed ITC, so in that case, the lapsed ITC, you can declare that in your table 4D of GSTR 3B, that is a basically reporting platform. But if you report this, then that 50% will go to the, the state exchequer and 50% to the central exchequer. I am talking about lapsed ITC of IGST ITC. If the IGST ITC is lapsed, that because you have not claimed, or the ITC is barred, in that case, time barred. In that case, if you disclose that in your table 4D of GSTR 3B, from your, table 8D of GSTR 9, so that will form the revenue from the part of the state government and the central government in the 50-50 ratio. So our tax officer, they may request you, if there is any lapsed ITCs reported in your table 8D of GSTR 9, so their request may come that please disclose this in table 4D of GSTR 3B. There is no harm. If you concentrate on Circular 170, that is also, it has been clarified. Okay.
Sir, very good you raised this, since sir is also there from CGST. I have two questions on this. Number one, sir, okay, 24-25 still I have to file my GSTR 9. So I can report it in 4D and report it in GSTR 9. Am I eligible for the past periods, whatever lapse ITC, to show it in the 3B currently? Number one, sir. And number two, is the CGST aligned with this approach?
So I don't know what is the approach of CBSE. Sir is there, can explain. But I know that as per the settlement mechanism, IGST is not revenue for state or center. That is clear. So when it is basically reported, as ineligible credit or used for making payment or of C or S, then it's become the revenue of the center or state. Okay. So if there is lapsed ITC, that is they are basically the common pool. That is not making any sense of the government revenue of center or state. So therefore we are requesting, and as per the circular is concerned, 170, there is no time bar regarding this reporting of this lapsed ITC. So I think there is no harm. So that is basically the reporting pattern. It will not, you know, that hit your debit or credit register of your ITC. So I don't know what is the harm on it. If the state government receive the revenue and the central government
of
receive
course,
the revenue on form the simple reporting of the same.
Yeah. Okay. Anything? Okay. Before that, Shomik, we'll come back to you. He has a question. Ekane mic din ekটু.
Progyananda of Anandabazar Patrika. I don't have any question regarding the clauses, regarding the sections about the nitty-gritties. I don't understand that also. My question is on the point of view of the beneficiaries, that is the public. So, already some of my friends have expressed the apprehension that, for example, on insurance, earlier it was 18%, now it is wiped out. If tomorrow we see that the insurance companies raise the premium, so a big part of that will be eaten up by the companies and the benefit will not pass on to the public. So is the government thinking in any step so that this thing doesn't happen? My second question is, a few days back, our state, precisely our Honorable Chief Minister expressed that if the, because you know there are a lot of discussions of that, what kind of changes are going to take place regarding the rates. She said that she apprehended that there will be a deficit of less collection of 10,000 crores. But a few days back, the State Bank has released a report where they said instead of decreasing the revenue, it will be raised by 31,000 crore. That means there is a big contrast about the thinking of the state and about the economic survey of a renowned organization like the State Bank. So what is the situation? What do you think that what is going to happen? And the first question, my second question. Thank you.
Yeah. So the first question actually was answered by the Revenue Secretary in the press conference. This apprehension is there, but yes, government is keeping a watch. And see, ultimately, even if the government keeps a watch, it's the market forces which will finally settle the rates. But I mean, common person can be certain that there would certainly be reduction in the prices of different health and life insurance schemes and many other products and services where the taxes have been reduced or rationalized. So the benefit will certainly flow, but in case we notice certain issues where it appears that there is no reduction, rather it's other way around, then yes, the government can still take some action there. But I'm sure that the general mood which has been created and expected forego of the revenue, people are saying annual is about 2 lakh crores, which will be nationally, government is basically foregoing, and that will be available with the common man, with the public, and that is likely to fuel the growth. So the demand will increase, then the growth will increase, then though rate has come down, but the increase in growth will offset that decrease in the rates, and overall after maybe a month or two, the revenues will again go back and increase what are being collected today. And over a period of 1 year or so, if we take into account, there will certainly be growth in revenue. That is what we expect, and it is likely to happen. So in the immediate like today, suppose you calculate with the same amount of supplies, same quantum of supplies, and you reduce the rate, there is likely to be reduction in revenue. But that reduction is ultimately putting money in the hands of the public, and the public will put that money back into the market. That will lead to increase in demand, and that increase in demand will generate more revenue, and ultimately in the long run it will be good for economy, where growth of the GDP growth will increase, and the revenues are byproduct of the GDP growth, and they are also likely to increase. I hope more or less, I mean, this is what right now can be said. What will happen finally, we all will come to know after 3 months, 4 months, that where we are heading. But it's a likely scenario that the revenue will also increase.
Sir, anything from you before we close? Sir, anything from you on this side? Dada's question.
Regarding that, that insurance, whether the, insurer, they will be benefited in this rate reduction to zero or not. In that question, that is the appreciation of the insurance industry, that since they are all ITC will be barred, so in that case, that will be their part of their cost. So in that case, there will be a very, minimum effect in the revenue, premium part, premium value of a particular insurance of health or life. But in that case, I want to explain one thing, that in case of health or life insurance, is basically the total output tax is paid on the basis of more or less 45 to 55% on ITC, and remaining part by cash, by utilizing the cash ledger. If the, total output tax liability is zero, in that case, that 45 to 50% ITC will form the part of the, that cost. But the value addition part, the remaining 50%, that will be zero. In that case, definitely the consumer will be benefited.
Thank you. There are many, I think 1 and 2, last 2 questions, because we are running out of time also. Yes. And kindly be brief, and whom you are asking the question, kindly pinpoint.
Sir, myself, Pawan Bhaiti from Superton Electronics. Sir, I am saying, we see, sir, sometimes for the same matter and same year, notices we are issuing from different authorities. So this is my question. If one authority has assessed us, so again we have to explain from to different.
No, this we are very, very clear about it, that against one taxpayer, it should be only one agency that should take up the issue. Once one agency has taken up, other agency should not come into play. Whether center has several agencies, DGGI is there, audit is there, anti-evasion is there, state has this thing. Any one agency, if it has taken up your matter, then there should not happen. It should not happen that somebody else is coming and asking the same questions again. If it is happening, you take this up. We will get it resolved. And it's absolutely unambiguous instructions are there on this, that it should not happen that a taxpayer has to reply same thing to different agencies.
Yeah. Last, yeah, at the back.
A very good afternoon to everyone. Thank you to the panel for taking out time to interact with us. My concern is regarding the real estate sector, where the GST Council has come up with amendment in the section 17.5D, changing plant on machinery to plant and machinery, even though the Supreme Court has given a relief to the taxpayer, mentioning that functionality tests should be checked for building to be classified as ITC. Since for the real estate sector, the ITC is huge. So any viewpoint on this?
Safari retreats.
I mean, after Supreme Court decision and then the board's clarification, what is more you want me to add in that?
No,
Sir,
the GST Council came up with an amendment in section 17.5D.
Yeah, so that was basically to take care of that Supreme Court judgment.
No, that is in contravention to the Supreme Court judgment.
So you want to address it?
Yes, you are asking that whether the ITC will be allowed to the real estate
Yes,
sector or not. No such plan so far, as my knowledge.
But today, sir, if we see today, 17.5D is not notified, that amendment, and Supreme Court has rejected the review petition also. So Supreme Court's judgment is the law. So abhi ITC milega ki nahi milega, sir?
GST Council may at some time say कि नहीं इसमें मिलना चाहिए. The question is कि when you are making a building which is attached to earth and it's something which is not good, so that is the concept which is there. So
But then the section 17(5)(d) itself mentioned that it should be on own account. Then those businesses who are in business
see,
development.
my understanding or my explanation will not solve this because this is already decided at the GST council level. So it has to again go there for any correction if they want to make. So whether rightly or wrongly, they are the apex body to make decision on such issues. And I mean, till now they are not convinced. So you make a convincing note and send to us. We will forward it with our recommendation and let's see whether GST council agrees with that.
Okay. Thank you, sir.
In fact, I can tell you one thing. Every note which we sent to sir, as well as CCT sir could not join today because he is in the GST council meeting. Every note which we sent from the Bengal Chamber National Fiscal Affairs Committee, that is reviewed over here, and they also recommend with their views. Sir recommends with his views, CCT sir recommends with his views, and it is marked to us also. It is marked back to us. So please write to us on this. We'll also review in the committee and we'll forward it if found out.
Sure.
So thank you very much, sirs, for this engaging discussion, and thank you for taking out the time for us. All of us are benefited by these government interactions. Thank you very much from the Bengal Chamber of Commerce and Industry again.
Thank you, sir, for the moderation, and thank you, sirs, for joining us. Now we have a pleasant task to perform. I request our chairperson, Mr. Vivek Jalan, to please present mementos to the dignitaries on the dais on behalf of Bengal Chamber. To Nilima madam. And also to Mr. Narayan Chandra Guria, sir. Thank you. I request the dignitaries on the dais for a group photograph, please. You can come in the front also. Thank you, sir. Thank you, ma'am. We will take a 5 minutes break before proceeding to the next session. I request all the delegates to please be seated. We are running behind the schedule. I request Mr. Jalan, the chairperson of the Fiscal Affairs and Taxation Committee, to please take the next session forward on burning issues of income tax, GST and customs, and Bengal Chamber's support to the trade and industry.
So good afternoon once again. So in this session, while the time allocated, in the schedule is a little more, but we'll try to cut short because we are already, running behind time. However, in this session, the purpose of this whole day seminar is to reflect upon all the tax professionals, the CFOs in the finance, CEOs, etc., that taxation has to be taken as a whole. Because today all the corporates, they are looking at the tax cost as a whole. And the tax cost in business, while it may seem hidden, it is constituting around 30 to 40%, right? So if we can all manage our taxation, and even if we can get a 5% benefit over there, by seriously looking at the law, the nitty-gritties, and taking the benefit wherever the law provides the benefit, then we can all as tax professionals and finance professionals add values to the bottom line in our businesses. So I'll take this in 4 halves, this session. One, of course, on GST 2.0, the nitty-gritties. We spoke in the last session on some of them. We will deep dive now into the nitty-gritties of tax professionals, post-sale discount, what is there for you from what we can understand from the press release. Next, and one of the biggest changes, Income Tax Act 25, while we all have heard and seen in the media that what the government is claiming is that it has simplified. Of course, it has simplified the law, and now if all of you read Income Tax Act 2025, you will see that it is readable. Unlike the current Income Tax Act 1961, where you start reading and wherever you start, you forget when you come to the end of a session, you forget where you started. You see, customs again is a very, an area which may require a lot of deep diving in the corporates, right? It is a big cost today for importers and exporters, specifically the import duties in today's era where tariff wars are going on, right? So that is one area, again, there can be major savings. And last, from the National Fiscal Affairs and Taxation Committee of the Bengal Chamber, we have almost all our committee members here, we will discuss with them, across panel discussions. We have taken big strides in all these areas, GST, income tax, as well as the customs policy space. So we would discuss, and we would also, request you all from the corporates to be involved with our committee and to keep on suggesting, like I was saying today in the morning, Priyanka has raised a pertinent issue which we were raising 2 years back on the settlement scheme for service tax and central excise. We ourselves are dwelling with cases 30, 40 years old, which I did not want to take those cases also. Who will read MODVAT sitting today, where for 1 or 2 cases, we have to dive. So this is not valuable for neither the consultants nor the corporates, and of course not for the government. So please keep on suggesting, and be assured that we will take it up with the government at all levels, center or state. So first up on GST 2.0, we have discussed on this. We will go through it more in detail. 2 important things which trade and industry raised, right? In fact, 3. Number 1, what will be the date of implementation of the rate changes? It is very clear, 22nd September, right? So today we are on 4th September, 22nd September morning, you have to change the rates in your masters, may it be goods or services, except for few items like pan masala, tobacco, gutka, etc. Number 1. Number 2, no anti-profiteering, right? We all apprehended anti-profiteering would come with the reduction in GST rates, no anti-profiteering. But number 3, what happens to my dealers, right? Dealers are not buying. my rate of goods have gone down from 12 to 5. Dealers say, sir, I will not buy as of now, right? I will buy on 22nd of September. This is a pain we have to deal with, because we represented, again, there are some representations which are, not taken care, because of various other reasons. So on the stock which is there on 21st of September, 12 o'clock at midnight, whatever accumulated ITC is there, inverted duty refund for the traders will not be available, right? So that you have to knock it off against the supplies of other goods or services which require cash payment as of now. We represented vehemently over the last 6 months. You see, one of our members is here, Saurav is here. He was facing a big issue on intermediaries. Now, what are intermediaries? The goods are moving from Japan to London, right? I am a commission agent in Calcutta, and I have to charge GST at 18%, and my customer, say in Japan, he cannot take the credit of that services, GST on services is also, right? That was because of section 13(8)(b) of the IGST Act, where it was said for intermediaries, place of supply is the place of the intermediaries. That now will be deleted. However, the impact may come in the winter session of the Parliament, because it requires an amendment of the Act. So possibly in the winter session or the budget session or thereafter, we have to see how the government wants to take it forward. But intermediaries, big relief. Even the Bombay High Court, the 2 judges were for and against. One judge was saying that the intermediaries, there should be GST. One was saying, no, there should not be any GST. Now it is very clear, for intermediaries serving to the foreign clients from India, it will be considered as export of services. Even refunds would be eligible. Discounts, post-sale discounts. Friends, we are happy to inform this August gathering and our members from Bengal Chamber last 1.5 years, we have been following up rigorously on post-sale discount with the GST Council at all levels, not only in the state of West Bengal, not only at the CBIC stage, but even with the Maharashtra Commissioner, Karnataka Commissioner, Chennai Commissioner. We have taken it up at all levels, because this is a pan-India issue, and all of you, many of you who have their businesses across states, you have seen by and large in some form or the other, this dispute is there in all the states. So there are 6 primary decisions, as we understand, which have been taken on post-sale discount, right? Number 1, if you can see in red on your scene, section 15 subsection 3 clause B subclause 1, this will be deleted. So what does it say? One major issue, when you are issuing a GST credit note for post-sale discount, you have to ensure 3 things, right? Number 1, you should have a pre-sale agreement. Number 2, credit note should be linked to the original invoice. And number 3, you as a supplier issuing credit note have to ensure that recipient reverses the input tax credit. These are the 3 conditions, right? So 15(3)(b)(1) will be deleted. No requirement of pre-sale agreement or linking of the credit notes with the original invoices. You might ask me a question, sir, what happened in 2019? On the portal, now you don't need to link. While on the portal you don't need to link, but the law requires that your physical credit note should be linked to the invoices. Now even that condition goes whenever section 15 is amended, right? Number 2, 15(3)(b)(2), right? That talks about the 3rd condition which I say. The supplier has to ensure recipient reverses the input tax credit. Here also possibly the item in red may be omitted. They have not said very clearly, but they have said, see, this requirement of the supplier ensuring recipient has reversed the input tax credit, we are going to do away with it. You issue your credit note, reverse your output tax liability, and government should take care of the recipient whether he or she is reversing the input tax credit or not. So possibly this will also go, right? Third change. Now here in section 34 on your screen, apropos 15.3b2, right? So what I said over there, that recipient reversal of ITC not the supplier's prerogative, that effect will be taken also wide amendment to this proviso to 34.2, right, which talks about the same thing, right? So this is the same thing. This is what the press release says. Number 4, fourth change, as we discussed, this circular 212, where you as a supplier have to take a declaration from the recipient of the credit note that he has reversed the ITC or not, below 5 lakh self declaration, above 5 lakh CA certificate, etc. That will be withdrawn, right? Circular 212 would be withdrawn, whether ab initio, whether post facto, that we'll come to know once the circular is out. Number 5 and 6, this is the space where I have had more than 15 meetings with all the commissioners, North Block, etc. We have reflected on them that this is a big issue which the field is raising. Financial credit notes. What is a financial credit note? Where the conditions of 15.3 are not fulfilled, you cannot issue a GST credit note, issue a financial credit note, right? Two main issues. Now, how is the supply chain in the industry, right? By and large, all supply chains, there are 4 hands: manufacturer, distributor, wholesaler, retailer, and from retailer to consumers, right? 4 hands. There are multiple issues. 7 to 8 examples I can give. I will give you only one example. Now, say, mobile phones. The rate of mobile phones travels southwards after it is launched. Samsung launches a mobile phone. I'm just taking the name, of a taxpayer just for understanding. We all know mobile phones. That is why. So Samsung launches a mobile phone at 1 lakh plus 18,000 GST today. It gives it to its distributor, distributor to wholesaler, wholesaler to retailer. There are various price points, and the retailer has to sell it at 1 lakh rupees, and his cost will be say 85,000 rupees, right? After 2 months, it is seen the value of the mobile phone goes down to 75,000, right? It happens. So what manufacturer will do? He will say, okay, don't give me back the product. I will give you a pass back discount. But how can manufacturer go to the retailer? He has to go through the channel, right? So this is called channel discount. So manufacturer will give the discount to the distributor, distributor to wholesaler, wholesaler to retailer, whereas the entire supply chain knows that this discount is actually for the retailer or maybe for the consumer. In this case, financial credit notes were issued because it was all post-sale. You didn't know pre-sale that this would happen. Here, the GST authorities, many of the field officers, they said that no, the retailer is giving you a promotional service. Retailer is selling your product. Retailer is doing marketing of your product. So retailer should raise a service invoice on wholesaler to distributor, distributor to manufacturer, right? And therefore, service invoices should be raised and not financial credit notes downstream. Service invoices should be raised upstream. It is a revenue neutral transaction. If they raise service invoice, we can take the credit. But after 2 years, after section 74 is demand is issued, then all ITC also gone. So this possibly they are going to clear what are the
instances where a service invoices should be issued, what are the instances where financial credit notes will be accepted as a discount. And last, on the same financial credit notes, there was a circular 105 which was withdrawn. They might reinstate that or come out with a similar circular. In a financial credit note, there is no loss of GST to the government. GST is gone, paid on the original supply. So no post facto reversal of input tax credit should be required. These are the 6 changes what we understand from this press release of the government on the issue of discounts. Certain inverted duty structure on textiles, fertilizers have been addressed. Next, whenever you are applying for refund, and it includes inverted duty refunds, export refunds, SEZ refunds for SEZ supply. As of now also there is a provision rule 91(2) where the officer should disburse 90% provisional refund within 7 days, but generally it does not happen. Now they are going to automate this. The officer need not scrutinize, it will be reverse. If the officer wants to scrutinize and go for a final refund without giving provisional refund, he has to write down the reasons why he is thinking, whether the dealer is risky, right? Otherwise, 7 days, 90% provisional refunds should be sanctioned, and thereafter final refund can be issued within 60 days. All the e-commerce operators, many of them, they were facing a big problem. Those of you who have been there in our earlier seminars, we have been raising this before the government. Registration, quick registration, specifically for those who register through only for selling on e-commerce. So even if you are today registering on Flipkart, you want to sell in Flipkart, your turnover is only 10 lakh. But Flipkart will not let you sell through it if you do not have a GST registration. And to take a GST registration, you have to go through a rigorous process. So they are bringing a quick 3-day registration, but with a condition that every month your GST payability should not be more than 2.5 lakh rupees. It is there, I have given the example of e-commerce, but it is there for others. Next, GST appellate tribunals, 3 dates, right? Number 1, by 30th September, you can start filing your appeals before the tribunal. Number 2, by 31st December this year, the GST tribunal will start hearing. Number 3, for old appeals, generally your time barring as per the order issued by the GST Council, the time barring period for filing appeal before the GST-AT was 3 months from the date it is notified that President enters office, right? 3 months plus 3 months condonation time. Now they have said that, okay, for the first few cases, old cases, we'll give you time till 30th of June 2026 for filing all your petitions, but please do not delay it so long, because as we all know that we don't know the count. Some say more than 1 lakh cases are pending, to be filed on day 1 before the GST-AT. So hearing itself may take a lot of time, and the more we delay, the more our cases would be delayed. Massive rate changes, we have discussed this again and again. It is not possible to go through this, in half an hour. It may not be possible in the next 1 or 2 days, but we have, this PPT will be shared with all of you. In the press note also it is there, all the rate changes. So you can go through that as per your industry. We have discussed on Mediclaim, insurance, etc., etc. Okay, one important thing on this is GTA, transporters. So there are 2 dispensations for transporters, 12% with ITC, 5% without ITC on reverse charge. That 5% without ITC on reverse charge remains. 12% with ITC for the transporters become
18% with ITC. So for your transporters, they will start charging you a little more, but we all take the input tax credit on that. So by and large, it is revenue neutral. So friends, this is all on GST 2.0, and now Income Tax Act 2025. I will not take you through 50% words reduction, you know, or simplified language, etc., etc. We all know, we have read. I will take you through 5 to 6 important changes which we feel intentionally, unintentionally, knowingly, unknowingly, you know, in a tax law, if you change one comma, full stop, you know, there is, we have all seen section 148, you know, of Income Tax Act. The litigation still doesn't die down, right? We have seen so much of, you know, hue and cry about section 43BH, right? And here we have the great Indian tax rewrite. The entire Income Tax Act has changed, right? So obviously, whenever you read section by section, and here at least I hope I am wrong, you know, maybe what I am saying is not the intention of the government, but we have discussed with CBDT also, and CBDT itself have claimed that a job which would require at least 5 to 6 years to rewrite this whole Income Tax Act, that has been done in 6 months, right? So, and it has been enacted also, right? You cannot change this anymore before at least the next budget. I am sure in the next budget also, Income Tax Act 2025 as it stands today may not be amended. So at least for the next 1.5 years, this Income Tax Act 2025 as it stands today remains. You know, so one by one, I have already discussed this in last time when we had our seminar, I think in March, right? And we are happy to inform, you have all seen in the media, I raised one important issue on the Income Tax Bill 2025. 12th February, the bill was presented by Honorable Finance Minister. 16th February, we represented before CBDT because Honorable Finance Minister was about to come to Calcutta on 25th of February. That, after a lot of discussions, has been accepted. So what was that issue? The issue was under section 263 of the Income Tax Act 2025. What is 263? So 139, currently 139 return filing provisions become 263 of the new act, right? If you see the income tax bill, not the current Income Tax Act, Income Tax Bill 263 1A9, and if you read it holistically, it came out that if you delay your return filing by even 1 day, you would not get the refund. We represented this again and again, had meetings with CBDT and the select committee, and it is now deleted. If you see the act, currently it is not there, right? What are the other pointers? So on your screen, 54 EC, and we feel that the same is there with 54. So for industry, if you are selling a depreciable asset, right? So as per section 50, there is a deeming provision today. Whenever you are selling a depreciable asset, and if the value of the sale is more than the block value, then the result is a short-term capital gain, right? However, that is a deeming provision under section 50, right? Even a long-term capital gain is deemed to be a short-term capital gain for the purpose of depreciable assets, right? But for the purpose of exemption under section 54 EC, or for that matter 54F also and 54 also, it still remains a gain on which you can claim exemption. So I'll take you to what 54 EC says on your screen, highlighted in yellow, right? 54 EC says where the capital gain arises on the transfer of long-term capital asset, then if you invest it in bonds, you can claim exemption. So over the last so many years, the positions which we have been taking, right, is that even if it is a short-term capital gain for the purpose of section 50, yet for the purpose of 54EC, it is a long-term capital gain, because the word used is not long-term capital gain. The word used is capital gain, right? Now see section 85, and as I said, maybe I am wrong, just below on the second part of the screen. So 54EC becomes 85, right? They have changed the words capital gain to long-term capital gain arising from transfer of land or building. So Bombay High Court, ACE developers negated. So as of now, 54EC talks about not capital gain, but long-term capital gain. Even that long-term capital gain is a deemed long-term capital gain. So possibly what we understand, and our first up thoughts are that Bombay High Court judgment in ACE developers, which we were taking again and again, we are taking shelter, that is negated. So now this for depreciable assets, that position may not be available in the new act. So TDS returns. See, as of now, we all get errors, right? TDS returns, every time you file, you don't know where the error comes, but every time error comes. So again, you have to file revised return. Sometimes you forget, you see, and then your customer tells you, "Bhaiya, mera TDS nahi gaya." Then what do? You do rectify, right? So as of now, you get 6 years to rectify TDS returns under section 200. 200 becomes 397. So now TDS is simplified. However, if you see 397, that 6 years is now reduced to 2 years. So now 2 years for filing rectified TDS returns. So from some bad news to some good news, right? I mean, it's not that it's only bad news. Some we feel again, and of course these all will be deliberated going forward. Rules are coming in December, forms are coming in December, we need to see, but the positions as it stands today, we all know for car, right? Now for perquisites, we have just done a big exercise for our clients, for salaries, salaried taxpayers, the taxation is the highest, right? There is not much scope. So we said, why don't you take the benefit of these cars? So what do we do in cars? When the employer is giving a car to the employee, then bearing a small amount of 2,400 per month, 1,500, etc. Balance is a tax-free perquisite. But when the employee himself owns the car and he takes a reimbursement of petrol, diesel, etc., then it is reverse. Then the perquisite amount is total and exemption is 2,400, right? So employer owned car, employer leased car, employee owned car, there is a difference in positions today in Income Tax Act 61. This we understand, you see on your screen in red, they have amended, they have reworded, simplified 17(2), which now talks not about ownership of the car, but expenditure incurred by the employer, right? So in our view, that complication of employer owned, employee owned may be negated. But however, you see, let us, all go along this journey of Income Tax Act 2025 implementation, and maybe things will change once the rules will come, or maybe we have to see the positions in the rules. So 69A, B, there is a family on unexplained investments, money, etc., etc. We all know 68, cash credits from Income Tax Department. The officers will take this session, not going into a lot of details, but again it is our understanding. In fact, in March Honorable Chief Commissioner sir was here. He had also, you know, accepted our understanding. So this is a Calcutta case only, long back. Calcutta, what happened? One transporter, he defalcated while transporting bitumen, right? So income tax department invoked, 69 on him, that this is unexplained, money or unexplained investment, etc. Supreme Court in the case of D.N. Singh has, in the judgment in the case of D.N. Singh, has held that 69 cannot be invoked or 69A(b) cannot be invoked because it is only for valuable article. Now question came, what is a valuable article? Honorable Court said that valuable article is an article which has low volume, high value. Low volume, high value, like diamond. Itta sa diamond, but huge value. But bitumen, huge volume, low value. So bitumen is not valuable article, of course not money, bullion, jewelry, etc. Therefore, this would not, 69 family would not be applicable therein it cost. Now they have amended 69 and 69B, it becomes 104. And they have amended this to asset, unexplained asset. तो valuable होने का जरूरत नहीं है. It can be any asset, right? Now again, whether the position which Honorable Court in the case of D.N. Singh had taken, whether that is negated or not, that again needs to be seen as we move forward in this journey of Income Tax Act 2025. This is the position in D.N. Singh. Okay, I'll take you through the last, of my pointers. There are few more, which will share the PPT with you because all our other speakers are there. We have another two more intriguing sessions on Income Tax Act, so we'll take up some issues there also. But last, you see, 15 days back, and we all know Startup India, Stand Up India, and how Indian, youngsters, even in the B towns, how we are doing. And it is a reality, friends, today, how we all can create values. And this is a live case I'm talking about, which came around 1 month back. So what happened? You see, one person in Dhanbad, 4 or 5 years back, he created some coding, right? Dhanbad mein bada bada, he started, creating his own codes or something. And today, he gets a investor, a PE, for 70 crore rupees. You see? So that code which he developed, no books of accounts, he has only one computer, few softwares, etc., did not account for goodwill, etc., nothing in the last 4 or 5 years. Or maybe some books of accounts he gave to his friends. Today he gets an investor who wants to purchase his code for 70 crore rupees. Now he comes, well, what is the taxation? We said, Arey, you have not maintained anything. You see, then we advise that, okay, go for slum sale. Why don't you sell your entire company as it is? He said, no. The investor is a foreign guy. He will take only my code. And then we broke our head and all, Girdhar ji also said that iska Vivek ji kuch nahi ho sakta. Okay. So, and then we advised that, see, no option over here, you have to pay the, the higher rate of taxes. Slum sale will not work. Now see the position of 50B, right? 50B on your screen, yellow, it talks about one or more undertakings. 77, apropos 50B, it talks about one or more undertakings or divisions. This word division is not defined anywhere, right? So, again, You see, we will have to see how the act evolves. In our view, how this division jurisprudence would evolve, move going forward, that needs to be seen. In our view, maybe, a division is different from an undertaking. Had a division being the same as an undertaking, in the current law they say divisions of undertakings, but they don't say divisions. So, what positions we will take going forward, you see, that we again as tax departments need to see as we move forward. Many others again, associated enterprises, etc. You can go on and on, but I would come to the last in income tax. Income Tax Act 2025 requires serious implementation, and as we read every day, you see my team is there. Here we have told them ki bhai, you also be here in this seminar so as to understand what are the issues of industry. We feel that Income Tax Act 2025 requires implementation, requires an impact analysis on the positions we have taken over the last at least 2-3 years. It requires a understanding of the current year's computation and how it will look like in the when the new dispensation takes effect on 1st of April 2026. You see the heading of this slide. This is not my quote. This is the quote of an income tax senior officer. Train is ready, taxpayers will have to take care of the track. Forms are not ready. Income tax portal ITBA 2.0, that is work in progress, and we need the department to work on ITBA 3.0, right? TDS returns on 7th of May 2026, you will have a new TDS challan, right? In July 2026, you will have to file a new TDS return. 15th June 2026, you have to not use the current income tax challan, you have to use a new income tax challan, new sections, new section number, new rules, right? Come 2026 March, 2027 March, you have to file the new income tax return, new ITR altogether, right? So, requires, serious thought, serious implementation, we would say, and from Bengal Chamber of Commerce and Industry, our committee, we are trying to have a section-wise, chapter-wise, 8 to 10 days course on this new Income Tax Act 2025. We are trying to fix up the modalities. So maybe time to relearn a new income tax code. With this, I come to the third part of my presentation on customs. 2-3 points only in customs. Number one is this mover scheme for manufacturers. What I got to understand, maybe I don't have the full picture, but in Bengal there are only 2 mover applications. What is mover? Mover is for manufacturers. Whatever you import, capital goods, even raw materials for the purpose of manufacturing, everything duty is deferred. If you import capital goods for the purpose of manufacturing, say tiles, right? Entire customs duty is free on the date of import. When it requires to be paid, after 15 years, 20 years, when you sell that plant or machinery, right? Raw materials also same, but for raw materials, you have to pay the customs duty when you clear the finished product. So it is only for operating cycle. So mover scheme for all the manufacturers, I think this is a very good scheme, and maybe Bengal also has to come forward
and take the benefit of these schemes in customs. AEO scheme, many of us have taken the benefit of this. And last in customs is bill of entry, revision. Many of us are going through post-sale, post-clearance audits, right? When the department comes and scrutinizes all our bill of entries. Now the biggest issue is that when the department raises a demand today after scrutinizing our bill of entries, and they say, okay, IGST you have paid less, you should pay more, you should have paid 28, you have paid 18. It is not a loss. I can pay 10% additional IGST to the customs department and take the input tax credit in GST, right? But the mechanism is not here. As of now, the technology mechanism is not set, and in Rule 36 in GST, this challan, TR6 challan is not a duty-taking document. You have to get the bill of entry reassessed, and we all know getting a bill of entry reassessed is a task. From Bengal Chamber, we have highlighted this multiple times. You see in almost all our presentations over the last 1 year, and I am happy to report that as per media reports, what we understand, the government is coming out with a technological mechanism whereby a bill of entry amendment can take place online, and it will be reflected, the change in GST payment. If you pay IGST additionally, it will reflect in your GSTR 2B. So all of this, the government is almost at the verge of implementing a technological platform for this. That is what we understand from the various reports which are coming in. So friends, to end up, the fourth part of the presentation is all our initiatives from the National Fiscal Affairs and Taxation Committee. We take delegations to the Honorable Principal Commissioner of CGST, to the CCT. See, we have had, every year we try to take a delegation, now even to Income Tax Department, we keep on making representations. So in all these areas, from our committee, all our committee members are here, and they would also agree that we are trying to add values to industry. So all of you representatives of trade and industry, we welcome you also to come out with your suggestions, with your representations. We ensure, as I've said, that we will represent adequately wherever, before the central government, state government, etc., etc. So thank you very much. GST rate changes, this is all the, this presentation will be shared with you on all the rate changes. It is the same as the press release, nothing new. So thank you very much for a patient hearing, and in case of any questions, I think we can take it up going forward. We are going to have many other sessions. Thank you very much.
Good afternoon, everyone. Myself, Sasikant Pandey, Additional Assistant Director, Training 1, National Academy of Direct Taxes, Regional Campus, Kolkata. I am a representative from the Income Tax Department. As we know, we often say that हमारा देश संविधान से चलता है, and Article 265 of the Constitution of India says that no tax shall be levied or collected except by authority of law. So this is the mother or originator of all the acts, including Income Tax Act. So the Income Tax Act, which is now going to change and enter into a new era by way of Income Tax Act 2025. The said act has been operational from 21st August 2025, when the President of India has given his assent, and now it has become operational. And as per section 1 of the new Income Tax Act 2025, it is clearly mentioned that the provisions of this section shall come into effect from 1st April 2026. So this is going to be effected from 1st April 2026. Now, when we talk about income tax, there are two words embedded in this. The first one is income and the second one is tax. So in order to understand the concept of income a little bit, I would like to throw some light upon you by taking your some valuable times, but just to go through these things that we are required to understand. So income means, in general parlance, income means income, not outgo. So the tax on income is always on income, अंदर आना, न कि बाहर जाना. तो अंदर आने वाले पैसे पे जो टैक्स लगना है वो इनकम है. बट यही क्रक्स है कि कुछ अदर सेक्शंस आर देयर इन द इनकम टैक्स एक्ट जो कि इस कॉन्सेप्ट के बाहर है. सो व्हेन वी आर टॉकिंग अबाउट इनकम, देन वी कम टू understand that in the older income tax act, section 14 was there, and that section 14, section 14, provided that save as otherwise provided by this act, फिर था कि all income shall be for the purpose of computation and taxation will come under 5 heads of income. तो the word, the phrase save as otherwise provided by this act, this was the rider. ये बताता था कि पहले भी कुछ ऐसे इनकम्स थे जो कि किसी हेड में नहीं आते थे. We always know that there are 5 heads of income: salary, income from house property, business income, capital gains, and income from other source. But the real feature of these 5 heads of income are entirely different from what has been said in section 14, that save as otherwise provided by this act. It transpires that there are certain incomes which don't come under any head of income, any head of income. So there are headless incomes as well. And that section 14 is covered now in the new income tax act in section 13, which also says the same thing. So this was the key feature: save as otherwise provided in this act. Save means except. As we have seen, and it was promised earlier, that the new income tax will be simpler. That is why so many changes have been made. When you use non-obstant clause like notwithstanding or something like that, तो उसके बदले irrespective of ये word लाया गया, ताकि general people, because the act is for the whole people. हम लोग मान तो लेते हैं कि सारा सब कुछ सबको जानना है, but the language was in such a way that it was very difficult to understand for a normal people. So that is why it is made simpler, really simpler. And so many provisions have been, which had either have been outdated or were of no use or could be simplified, have been brought out of that purview. So in income tax, where we are going to tax on income, there are some incomes of different nature which don't come under any head of income, जिसको ना हम सैलरी बोल सकते हैं, ना इनकम फ्रॉम हाउस प्रॉपर्टी बोल सकते हैं, ना इनकम फ्रॉम बिजनेस बोल सकते हैं, ना कैपिटल गेन बोल सकते हैं, ना अदर सोर्स बोल सकते हैं. तो ये जो इनकम है, सेव एज अदरवाइज प्रोवाइडेड बाय दिस एक्ट, जो कि अभी नया वाला में इन हो गया है, सेक्शन 13 बन गया है, उसमें बाई के बदले इन हो गया है, और ये पांचों हेड स्मॉल ABCD में आ गया है. यही रूट है इनकम टैक्स में, टैक्सेशन का बेस यही है. यही हमको बताता है कि कैसे इनकम को हम टैक्स करने जा रहे हैं. तो इन दिस केस हम जो मेन फीचर देखते हैं, चाहे वो किसी भी हेड का इनकम हो, अगर सैलरी हेड का इनकम है तो उसका नेचर और सोर्स हमको पता है कि दिस इज अ रेवेन्यू रिसिप्ट. बिकॉज टैक्सेशन का जो बेसिक प्रिंसिपल है इन इनकम टैक्स डिपार्टमेंट, कि only revenue receipts are to be taxed. But if there are some specific provisions, like for capital gains are there, then only capital receipts can be taxed. But in general, income tax has to be charged on revenue receipts only, except otherwise provided in the act itself. So, in general, in all 5 heads of income, the nature and source is known to us. Because suppose I am a government employee, so my government is making an expenditure and that expenditure becomes my income. So every income is an expenditure and every expenditure is an income. Both are equal. Until there is an expenditure, there can't be an income, and until there is income, there must be an expenditure. So income और expenditure का जो चक्र है ये शून्य की तरह है. Expenditure है तो income होगा, income है तो expenditure होगा. तो हमारा जो सैलरी इनकम मिल रहा है गवर्नमेंट को, गवर्नमेंट से, उसका नेचर एंड सोर्स हमको पता है कि गवर्नमेंट दे रही है और इसका नेचर क्या है, रेवेन्यू रिसिप्ट है. हाउस प्रॉपर्टी में भी हमको पता है कि देयर मस्ट बी ए हाउस प्रॉपर्टी होना चाहिए, लैंड और बिल्डिंग अपार्टमेंट देयर टू होना चाहिए, और उससे कोई रेवेन्यू रिसिप्ट आ रहा है तो इनकम फ्रॉम हाउस प्रॉपर्टी है. बिजनेस में भी वही चीज है, बिजी वर्ड से बिजनेस बना है तो देयर मस्ट बी बिजी एक्टिविटी है, उससे जो रेवेन्यू रिसिप्ट आ रहा है दैट इज बिजनेस इनकम. उसी तरह से कैपिटल गेन इज द ओनली टैक्सेशन व्हिच इज बेस्ड अपॉन कैपिटल नेचर, because it arises out of transfer of a capital asset. So this is only one capital receipt which is chargeable in income tax. Otherwise, thereafter which comes income from other source, that is also a revenue receipt. So in general, all the incomes, be it in the form of revenue receipts or capital receipts, are taxable in India, but there are certain transactions which are not income, but they are deemed to be income if the nature and source is not known or not explained by the person who has done that transaction. So यही समझने के लिए थोड़ा सा हम लोग, now if we go through the planning of taxation, there is chapter 4, and we always know that birds of same feather flock together. तो चैप्टर 4 में ही ऑल 5 हेड्स ऑफ इनकम का कंप्यूटेशन है. इनकम टैक्स एक्ट के चैप्टर 4 में जितने भी 5 हेड हैं उनका कंप्यूटेशन का सिस्टम दिया हुआ है. और कंप्यूटेशन वर्ड जो है वो कंप्यूटर की तरह है, कैलकुलेशन वर्ड जो है कैलकुलेटर की तरह है. नाउ यू कैन इजीली अंडरस्टैंड द डिफरेंस. कंप्यूटेशन रिक्वायर्ड सम एप्लीकेशन ऑफ माइंड. तो जैसे कंप्यूटर एक कॉम्प्लेक्स चीज है, उसी तरह से कंप्यूटेशन इज ऑल्सो ए कॉम्प्लेक्स थिंग. लेकिन इनकम को हम लोग हमेशा कंप्यूट ही करते हैं और टैक्स को हमेशा हम लोग कैलकुलेट करते हैं, बिकॉज देयर इज नीड ऑफ ओनली कैलकुलेटर. सो दैट कैन बी डन ऑन दैट बेसिस ओनली. तो व्हेन वी आर टॉकिंग अबाउट 5 हेड ऑफ इनकम, चाहे सैलरी इनकम हो, चाहे बिजनेस हो, चाहे अदर सोर्स इंटरेस्ट इनकम हो, चाहे कैपिटल गेन हो, चाहे कुछ भी हो, तो उसमें नेचर एंड सोर्स हमको पता है. बट देयर आर सर्टेन ट्रांजैक्शंस जिसमें नेचर एंड सोर्स ही क्वेश्चन पे होता है और उसमें इनकम का कैरेक्टर नहीं होता. सपोज आप कोई घर खरीद लिए या कोई शेयर में इन्वेस्ट कर दिए या किसी के यहाँ सर्च हुआ तो उसके यहाँ मान लीजिए 50 लाख रुपया मिल गया. तो ये जितना चीज हम बता रहे हैं ये अलग टाइप का चीज है. जैसे घर खरीद लिए तो इनकम नहीं हुआ, आउटगो हुआ मनी का. इसीलिए ये सब जो ट्रांजैक्शन है जो कि चैप्टर 6 में डिफरेंटली गिवन है, 68 to 69D इज वाई इंपॉर्टेंट. नाउ इट हैड बिकम सेक्शन 102 से 106 बन गया है. तो वाई इट इज इंपॉर्टेंट, बिकॉज दिस इज ऑल्सो टैक्सेबल इन द सेम वे बट एट हायर रेट्स. सो वी शुड अवॉइड टू गो इनटू दैट लाइन ऑफ टैक्सेशन, बिकॉज वहां पे 60% का टैक्सेशन है. अगर हम कोई घर खरीद लेते हैं और इफ आई एम अनेबल टू एक्सप्लेन द नेचर एंड सोर्स, देन इट वुड बी इन्वेस्टमेंट अंडर सेक्शन 69. और इसमें जो है हमको 60% प्लस 25% सरचार्ज प्लस 4% एजुकेशन सेस, 78% तो मेरा पैसा ऐसे ही चला जाएगा टैक्स में. तो उससे बचने के लिए, और ये दिखाता है कि ये जो एंगल ऑफ टैक्सेशन है इनकम टैक्स में, ये इस आधार पे बनाया गया है कि यू हैड सम अनडिस्क्लोज्ड इनकम and by application of that undisclosed income you have made certain transactions referred to in a different chapter 6 जहां 68 to 69D is there. So 68 to 69D एक different chapter है, chapter 6, और हम जानते हैं कि एक चैप्टर में एक चीज से मिलता जुलता चीज ही हम लोग स्टडी करते हैं। तो 68 से 69D जो है, जैसे इनकम वी हैव ऑलरेडी डिस्कस्ड इनकम, बट चैप्टर 6 में ये कॉन्सेप्ट है ही नहीं। चैप्टर 6 में कैश क्रेडिट है, डील्स विथ कैपिटल रिसिप्ट्स, and I have already said that capital receipts are not income unless it is out of transfer of a capital asset. Similarly, investment में out go of money है, income नहीं है। उसी तरह से मनी, बुलियन, ज्वेलरी वगैरह में भी हमारा चीज पैसा लग रहा है, आ नहीं रहा है। अनएक्सप्लेन्ड एक्सपेंडिचर, इसका नाम ही एक्सपेंडिचर है। अमाउंट बोरोड और रिपेड ऑन हुंडी, इसका नाम ही है बोरोइंग और रिपेमेंट, ये लोन की तरह है, और लोन कभी भी इनकम नहीं हो सकता। सो दैट इज वाई एक different chapter has been created in the Income Tax Act to tax certain types of transactions that are made out of application of income. Those are not real incomes, but they are deemed to be income if their nature and source is unexplained. But the same thing has been changed, and I told you that the income tax had become simpler now. तो पहले क्या था, 68 सेक्शन एक था जिसका नाम था कैश क्रेडिट। कैश क्रेडिट इसमें था कि बुक्स ऑफ अकाउंट में अगर कोई क्रेडिट मिले तो वो 68 में आता था, अगर नेचर एंड सोर्स वो एक्सप्लेन न कर पाए। लेकिन बुक्स ऑफ अकाउंट में आता था, कैश वर्ड वहां पे इन्वॉल्व नहीं होता था, बट उसका नाम था कैश क्रेडिट, तो वी ऑफन गॉट कंफ्यूज्ड कि कैश एलिमेंट है, बट इट वाज नॉट देयर। दैट इज व्हाई इन ऑर्डर टू सिंप्लीफाई दैट प्रोसीडिंग 102 सेक्शन जो नया आया है कैश क्रेडिट के बदले, उसका नाम बदल के कर दिया अनएक्सप्लेन्ड क्रेडिट, कि ऐसा क्रेडिट जो अनएक्सप्लेन्ड है, मतलब कहां से वो क्रेडिट हुआ, उसका नेचर क्या है और सोर्स क्या है। उसी तरह से मनी, बुलियन, ज्वेलरी वगैरह में भी क्लियरली सबको एक नए सेक्शन में फिर से लाया गया है, और पार्टिकुलरली देयर इज अ चेंज इन अनएक्सप्लेन्ड मनी में, अनएक्सप्लेन्ड एसेट में जो चेंजेज आया है, दैट इज कि पहले मनी, बुलियन और ज्वेलरी अगर कहीं फाउंड होता था एंड इफ द पर्सन वाज अनेबल टू एक्सप्लेन द नेचर एंड सोर्स, देन ओनली इट वाज टैक्सेबल। नाउ वन न्यू थिंग हैज बीन इनकॉर्पोरेटेड, दैट इज वर्चुअल डिजिटल एसेट्स, यानी क्रिप्टो करेंसी। क्रिप्टो करेंसी को भी हम लोग अभी मनी, बुलियन और ज्वेलरी के लाइन में ले आए हैं। तो मनी, बुलियन और ज्वेलरी की तरह क्रिप्टो करेंसी का भी अगर नेचर एंड सोर्स एक्सप्लेन नहीं हो पाता है तो ये टैक्सेशन में आ जाएगा। बट क्रिप्टो करेंसी में एक अच्छा चीज गवर्नमेंट ने किया है असेसमेंट ईयर 2023-24 से, कि क्रिप्टो करेंसी हैज बीन ट्रीटेड एज इक्विटी शेयर्स, मतलब इट कैन बी हेल्ड एज इन्वेस्टमेंट एंड ऑल्सो एज अ स्टॉक इन ट्रेड। दैट इज वाई रिटर्न ऑफ इनकम, नॉन बिजनेस जो रिटर्न है उसमें दोनों ऑप्शन दिया है, कैपिटल गेन दिखाना है कि बिजनेस इनकम दिखाना है, और बिजनेस रिटर्न में और नॉन बिजनेस रिटर्न में शेड्यूल VDA इज देयर, दोनों में शेड्यूल VDA इज देयर। उसमें दिखाया है कि उसमें आप कैसे दिखाना चाहते हैं, आप केवल कैपिटल गेन का ही ऑप्शन दिया है बिकॉज दैट इज नॉन बिजनेस। सो क्रिप्टो करेंसी भी शेयर की तरह ही टैक्सेशन का प्रोविजन लाया गया है, और एक अलग सेक्शन भी उसके लिए लाया गया है। सो दीज आर द थिंग्स दैट वी हैव टू कीप इन माइंड, एंड द मेन सो चैप्टर 4 और चैप्टर 6 में जो प्रोविजंस है, चैप्टर 4 में ही पांचों हेड ऑफ इनकम का कंप्यूटेशन है, एंड इन चैप्टर 6 में ऐसे इनकम्स हैं जो कि इनकम नहीं है, बट अगर उनका नेचर एंड सोर्स उन ट्रांजैक्शन का एक्सप्लेन ना किया जाए तो दे बिकम इनकम। बट इन केस द नेचर एंड सोर्स इज एक्सप्लेन्ड, अब मान लीजिए आपने इन्वेस्टमेंट किया, या आपके यहाँ ज्वेलरी मिला है, या आपके यहाँ कैश मिला, और इफ यू आर एबल टू एक्सप्लेन द नेचर एंड सोर्स, तो ये तो एसेट हुआ ना, या इन्वेस्टमेंट हुआ ना। दिस इज नॉट इन द फॉर्म ऑफ इनकम, देयर इज नो इनकम, देयर इज आउटगो एक्चुअली। सो दीज आर treated as income or deemed to be income only when the nature and source is unexplained. Otherwise, if the nature and source is explained by someone, they cannot be treated as income. So chapter 6 में जितने भी items हैं जो different chapter में हैं, वो इनकम तभी होंगे जब नेचर एंड सोर्स एक्सप्लेन नहीं होगा, एंड इन केस नेचर एंड सोर्स इज एक्सप्लेन्ड, दे कैन नॉट बी डीम्ड टू बी इनकम। सो दिस इज द कॉन्सेप्ट ऑफ इनकम व्हिच वी टैक्स, और दैट इज बेस्ड अपॉन फाउंड एक्चुअली, वेयर दिस वाज सेक्शन 69A, इट वाज स्टेटिंग दैट कि जिस ईयर में किसी के पास मनी, बुलियन, ज्वेलरी मिलता है, अभी क्रिप्टो करेंसी भी इसमें आ गया है। और इफ ही इज अनेबल टू एक्सप्लेन, तो जिस ईयर में फाउंड हो रहा है उस ईयर में ही डीम्ड टू बी, ये नहीं कि वो बोले कि हम इस ईयर में इसको खरीदे थे, ये किए थे, वो किए थे, इट विल नॉट डू। जिस ईयर में फाउंड टू बी ऑन्ड उसी ईयर में टैक्सेशन होता है। इसीलिए सर्च वगैरह में आप देखते होंगे कि जिस ईयर में फाउंड होता है उसी ईयर में हम लोग 69A को प्रोविजन को लगाते थे। सो दीज सम आइटम्स आर देयर। अभी अनएक्सप्लेन्ड एसेट में वर्चुअल डिजिटल एसेट को भी लाया है और क्लियरली मेंशन कि द इट वुड बी द इनकम ऑफ द टैक्स ईयर इन व्हिच सच एसेट हैज बीन फाउंड। और देयर इज अ स्पेशल टैक्स रेट, पहले भी था अभी भी है, बट सिंप्लीफिकेशन के कारण क्या हुआ है कि पहले हम लोग एक अलग जगह 115 BB में जाके टैक्स करते थे 68 से 69D वाले इनकम को, बट नाउ 102, 3, 4, 5, 6 के बाद 107 नंबर का सेक्शन लाया गया है एंड इन दैट 107 इटसेल्फ ये बोल दिया गया है कि इसका टैक्सेशन कहाँ पे होगा। सो दीज आर द simplification process of new income tax act which has been effected from 21st August 2025 कि अगर कोई इनकम है तो उससे रिलेटेड टैक्सेशन का प्रोविजन ऑल्सो हैज बीन ब्राउट एट द सेम प्लेस, नहीं तो हम लोग को खोजना पड़ता था कि कहाँ पे जाके खोजें। सो दीज आर सर्टेन चेंजेज एंड वी होप दैट। और वन मोर थिंग वी आर सीइंग हियर कि द मेन फोकस ऑफ द गवर्नमेंट इज ऑन टैक्स कॉम्प्लायंस। एक्चुअली आप देखिए 12,75,000 तक सैलरीड पर्सन के मामले में इस फाइनेंशियल ईयर में कोई टैक्स नहीं लगने जा रहा है, बिकॉज 12,75,000 में 75,000 तो स्टैंडर्ड डिडक्शन मिल जाएगा और अप टू 12 लाख अगर इनकम है तो जो भी टैक्स बनेगा उस पर 87A का रिवेट है। तो गवर्नमेंट एक्चुअली चाहती है कि लोग रिटर्न फाइल करें, कंप्लायंस को समझें। और इतना ट्रांसपेरेंसी है नाउअडेज कि इफ यू गो थ्रू इनकम टैक्स फाइलिंग पोर्टल, ई फाइलिंग पोर्टल, यू विल फाइंड देयर AIS एनुअल इंफॉर्मेशन स्टेटमेंट और आप खुद समझ सकते हैं कि मेरा सेविंग का इंटरेस्ट इतना दिखाया हुआ है, इसमें ऑलरेडी आ जाएगा। पहले क्या था, हम लोग समझ में नहीं आता था सेविंग का इंटरेस्ट कितना दिखाएं, FD को कितना दिखाएं। अभी आपका AIS जो है एनुअल इंफॉर्मेशन स्टेटमेंट में ही फाइलिंग पोर्टल में जाते ही आप खुद देख लीजिए कि आपका सेविंग इंटरेस्ट कितना दिख रहा है, FD का इंटरेस्ट कितना दिख रहा है, आपने कोई शेयर खरीदा है तो कितने का खरीदा है, आपने बेचा है तो कितने का खरीदा है। एवरीथिंग इज बीइंग रिफ्लेक्टेड नाउ एंड ड्यू टू दैट ट्रांसपेरेंसी इट हैज बिकम इजियर फॉर अस टू फाइल अ रिटर्न ऑफ इनकम। सो दीज आर समथिंग एंड you people related with the Bengal Chamber of Commerce are the backbone of the industry in Bengal. So I hope and wish you all the best for the new Income Tax Act 2025 and wish that you all will be take the Bengal ahead as we are trying your best. Thank you very much.
The moderators for the panel discussion on income tax bill preparation for taxpayers to please be on the dais. Mr. Vivek Jalan, Chairperson, National Fiscal Affairs and Taxation Committee of the Bengal Chamber of Commerce and Industry and partner Tax Connect Advisory Services. Mr. Ashish Agarwal, Lead Tax M Junction Services. I now request all the panelists to please be on the dais. Mr. Giridhar Dhelia, Advocate, Calcutta High Court and Tax Litigation Consultant. Mr. Gautam Sengupta, Senior General Manager and Head Taxation, Eveready Industries India Limited. Mr. Govind Mundra, Head Taxation and CFO, Karamchand Thapar and Brothers Coal Sales Limited. And Mr. Nirmal Meheria, Director Finance and Operations, Supertron Electronics Private Limited. I request the moderators, Mr. Jalan and Mr. Ashish Agarwal, to please take the panel discussion forward.
Thank you, Sharbani. And this session on panel discussion, you have seen that it is a mix of industry and consulting. We have divided it amongst the two moderators. Generally, there is one moderator, but there are two distinct topics for you. One is on the compliances which is going to come, ITR filing and the tax audit report, which all of us would be filing in the coming few weeks. And the other is on the issues. I have shared my views on Income Tax Act 2025. Maybe few of the thoughts from the other industry members will take. So first, Ashish ji, I would request, if you can take the ITR and the tax audit report session.
Thank you, Vivek. So, all of us have already started with the tax session, and we already have the individual tax filings due by 15th of this month and the other to follow. We all are seeing there are a number of disclosures, the number of information in the returns and tax audit have increased tremendously. So we thought of having this session with all the industry leaders and how are they tackling, what are the changes and what are the disclosures required, how are they tackling with the information, what are the strategies that they are following. So we are having this session, and I'll start with Nirmalji first. Nirmalji, my question to you is, you must have gone through the disclosures. Your team must be telling you every day that, so this is the data required, this is the type of disclosures required. So what do you think? Should companies or should the corporates switch to tax technology and fill the returns through technology, or should the manual controls only supersede? What is your thought on that?
Good afternoon. I think technology will nowadays play a very great role in compliance, and taxation is no more a manual thing, because you are filing all income tax returns, GST returns, everything online. And if the reconciliation and the things you see, if the AIS statement you see, the lot of information is there. Now you have to validate those records from your own records, because if you are a big corporate, you must have your internal systems and ERPs and other things you are using. But the data which flows from your ERP and the data from the department's systems must match. And this is a Herculean task, and no one can do manually. So I think people have to go with the softwares. Lot of apps and other softwares are there for matching and all these things. So we have to take the help of technology, and in the future, technology, AI, through AI you can, because AI is a buzzword, but not it is a buzzword, it can help you in finding the differences, gaps, where you can improve yourself, what are the missing links. You can even direct the mails, emails. Let's say if any mismatch is there, anybody has not credited the TDS in your account, through AI you can fire a direct email to that particular person or deductor that you have not credited my this tax filing you have not done. So technology will play a very great role down the line. It's very clear. Because you can see that government is also playing the, like virtual digital assets, they are treating now as an assets class. So these are all part of technology only.
Well, thank you, Nirmalji, for the thoughts. Yes, technology is something that we should all look forward to, because technology will only drive the tax in the coming times. Tax and technology are the two T's that the company should think on. Thank you for that well thought. As Sashikant ji was there on the dais just now, he was telling on his thoughts of income tax, that income is anything that is incoming. Similarly, as he also mentioned that on expenditure and other things, there is also income tax. We have MSME provisions, and MSME things have seen a change over the years. Tax audit reports have changed drastically, and the number of disclosures required for MSME payments, those being expenditure, not being income, but still income tax requires the type of disclosures for tax for MSMEs, has changed over the years, and the type of requirement for MSME in clause 22, Gautanda, has changed a lot. So what do you think, the type of disclosures required in tax audit report, what are the 3 pain points that you see, and how do you strategize to follow for this financial year?
First of all, good afternoon everybody, and thanks Bengal Chambers and Mr. Jalan, the chairperson, to give me this opportunity to be a panelist before this August gathering. Now coming to MSME, MSME is not this year's problem, this is coming for last couple of years. It's clause 22 which was inserted. Previously it was inadmissible interest under section 23 of the MSME Act, and or the amount as required for under 43B clause H. This was the clause. Now there is a change in this. So previously we all used to determine whatever the liability under section 43B. So we were not considering within the year transactions. Whichever is paid within the year, be it before time or after time, as allowed under section 15 of the MSME Act, we were not reporting those things. But from this year, what they have done, they have changed that or portion from required under section 43B to whatever is payable to the MSMED and whatever has not been paid under section 15 within the time limit allowed under section 15. So now what we will have to do, we will have to take out the total payments made during the year to the MSMED, the micro and small enterprise. Here medium is not considered. Micro and small enterprise, and we have to show when we have paid them. So the date of payment against each and every MSME vendors is required to be shown separately. Now this is a huge task which has increased in this year. And also we have to show on which there is no payment being made within the time limit, be it also within 31st March. Whether or not it is within 31st March or not, within this year, whether that is required to be shown and disclosed. Now here there is a very interesting change, and the section speaks about whatever is required under section 23, the inadmissible interest, or whatever is required to be shown under, whatever payment is required to be shown, which is paid within the timeline and after the timeline. So shall we consider this or as an alternative? So the assessee can take a stand that since the word or is used, we can only show the interest inadmissible, and we will not go into the second part because it is or, not and. However, the ICAI guideline on tax audit, the guidance note, speaks that it clarified that here or means and. Now this is a real problem because the tax auditors will go by the ICAI guideline. However, strictly speaking, this is a tax audit under section 44AB of the Income Tax Act, and the rules are made under the Act. So it cannot, the rule, income tax rule, the tax audit guidance note cannot override the income tax rules. So it is to you all, to the assessees, to speak to your auditors. If they agree, then only give the first portion. Otherwise, there is no other way. You will have to give each and every payment made during the year, each and every payment not made during the year within the time limit prescribed under section 15, and disclose. So there will be huge annexure which will be more than the last year. So this is a real issue, but you will have to be geared up and handle this issue. And also the income tax department can come up after seeing this through their internal generated system, that whether the interest portion has properly been calculated by you, whether it has been properly debited in the PL account. So all these issues will come. So be prepared for this. And as I said, you can stick to your own contention that ICAI guideline cannot overrule income tax rules.
Absolutely, that's bang on. Till last year, we used to report only the delays in payment that we have made, the amount and the interest itself. But this year, as Gautamji mentioned, we have to report all the delays along with all the payments that have been made on time as well. So, if I have the liberty to ask one question to one of my co-moderator, I'll place one question to him. Till last year we were reporting an X amount of interest that is accrued on account of the delay because of delay in payment to MSME. But this year, since we are reporting an entire annexure of what are the payments due, what are the actual on-time payments, what is the delay. So there can be cases, Vivekji, wherein we have sought a waiver from the MSME vendor of interest, but the department is not known of that waiver, and they have this data, so they can calculate the interest as well through their softwares, and they can come out with a disallowance saying, no, you have said 10 lakhs rupees is disallowed, but I find 10 crores is disallowed. So what is your take on that?
I will tell you the history of this 43BH, one of the experiences before answering this. Okay, we all must understand what is the source. Sir was speaking about source, and now source of source in 68. So in the last pre-budget, the July budget, we had a pre-budget consultation in the North Block with the CBDT. Honorable Finance Minister chaired that session. 10 or 15 chambers of commerce were called, right? And 43BH at that point of time was a burning, issue with the trade and industry. Although they had done away with the 31st March guideline, still we were expecting that maybe retrospectively they will amend 43BH to provide relaxation. And my turn came after the earlier industry. They were speaking on late payment of MSMEs for some NBFCs. So that triggered a huge issue, and what I understood is that 43BH will not be dropped. And my first point was 43BH, right? So I held back that point because CBDT is very clear on 43BH. They want to promote MSMEs, rightly so also to an extent, by whatever means. And the view of Honorable Finance Minister was also very clear. Ki, see, I have only given tooth to the MSME Act, which is there from so many years. And that was also represented by MSMEs, right, before the CBDT. That, see, in GST, this is 180 days. Why don't you come in income tax also with something similar to that 180 days 16(2) proviso in GST? So in this backdrop, what I understand is, first, legally, I think it can absolutely be contested by all the taxpayers that there is no provision of notional, adding back notional interest or something on which the department doesn't have data. But I see only one solution to this. Tell your auditors in their tax audit report to give a comment on this, that so and so taxpayer auditee has taken so and so declarations from the MSMEs that interest is waived off, or whatever thing you have taken, and thereafter with that comment from the auditor, then you go ahead and maybe make a case for yourself if litigated by the department.
Yes, yes. Please.
Yeah, that is a very good point, Vivek. But only thing that in the 3CD portal, while we are keying the data, the provision of declaration will not be there. So whenever they will give the data which they will have to give, otherwise that portion will not be, can't be left blank, automatically while processing the return in 143(1), they will pick up those data. Even the auditor gives those declarations, how to put those declarations, so that will be an issue for everybody, I think.
No, but that I think there can be an attachment to the report, even though it may pick up by this auto-driven tool. But if you have taken a report from the auditor separately and attached it, I think that should prevail in case there is litigation.
Absolutely.
Okay, absolutely.
It can be given as a caveat by the auditors in other information or anything that they fill in the top sheet of the 3CD form. So
thank you.
That's the welcome thought from Vivekji, and that all the taxpayers, all corporates should think upon and tell your auditors and first hand itself please give this caveat in the tax audit report so that I can prevent myself at the time of assessment. So Gautam ji mentioned about ICAI guidance note on tax audit. My next question to you, Govind ji. The ICAI guidance note mentions that a lot of things. It's a fat book and it mentions a lot of checklists, a lot of documents, and tax audit itself is just a certification. It's not audit per se. It is said as an audit, but it's a certification. So what do you think? How is the number of disclosures and the number of checklists taking tax audit from a certification to a quasi investigation tool?
Good afternoon all, and first of all I'd like to thank Bengal Chamber and Mr. Jalan for organizing this knowledge sharing session. To take your question, yes, gradually we have seen over the years that time and then the disclosures have been increasing, like we were rightly discussing about the MSME thing. So I believe not only a kind of quasi investigation, but this also adds up to giving more information to the department and giving them an avenue wherein they can actually kind of further drill down in order to give us and come up with some surprises of new additions, as well as there will be chances of some errors, or there will be chances of some interpretation issue wherein which will also result in penalty. So the point is, the more we go up with the disclosure, we have to be synchronized in our system, in our thought process, that all sorts of disclosure we have an advanced checklist wherein we can ensure that even minute disclosures are taken care, and at the end of the day, if we don't disclose or don't put up any particular requirements which are required as per guidance note or as per the rules, then we don't end up bringing up too many penalties. So I think it is a matter of utter caution that time and then as and when we are increasing the kind of disclosure requirement, we also are sanitized with the necessary information in advance, and all the things can be taken care of.
On a lighter note, maybe number of words of tax audit guidance note also needs to be reduced.
Actually.
Like Income Tax Act.
Absolutely.
No, the tax auditor often take the stand that the statutory audit is actually, they are supposed to show a true and fair view. But the tax audit, they are supposed to show a true and correct view.
It is a certificate. Yeah.
So we always fight with the same auditor who does the stat audit, unnecessarily goes into very deep details, and this is their only their defense that no, we will have to show a true and correct view. So that is another pain point.
Absolutely. This thing is very close to my heart as well, and I believe most of us who are sitting here have this in their hearts as well, that the auditors, when they come, they have a different point of view when they do tax audit, and the same auditors have done the stat audit as well. So that's bang on. And as Govindji also mentioned, that penalty, because of the number of disclosures and the number of informations, penalty is something that can come back. I've seen over 15, 17 years of my career that most of the penalty notices are coming because of the number of disclosures that we are making. I still remember my principal telling me, document utna hi do jitna manga. Don't give more. But tax audit is asking for so much. So penalty is something that can always come back. So my next question to you, Girdaji, there is one disclosure required for foreign assets in the income tax, and also income from foreign lands. So there are different financial years followed in different countries, like Bangladesh follows July, European countries follow July, there are USA follows December year end, we follow March. So what is your take on that? And the income tax requires a disclosure of all these assets and income as on 31st of December. So what is your take on that? What should we as taxpayers do to tackle these foreign assets and foreign income?
Thank you, Ashish, and thank you, Bengal Chamber, for having me here under the leadership of our own Vivek Jalan, the chairperson of the committee. So, coming to your question, Ashish, that we had to report the foreign assets in the income tax return. As far as the corporate concerned, and basically the foreign asset relating to their related enterprise or other units in the other part of the world. So, and there being different timeline or different dates for the closure. I am having view that means, the disclosure required in the ITR is not basically means, the audited something, or means, the closure we are talking about is basically the closure of books, or means, when the books get audited, if that audit requirement is there in that part of the world. So having means, said that the disclosure which is required is of the asset which we well know or well can collect, means, from our connected organization, connected unit, means, well in advance, because when it had means, been invested or when it been done by us, that data is already with us. If there is in development, then we can always have. So we can compare it like with the means, the amalgam, basically the merger and other means, consolidation things what we do for the other units which are there in the different part of the world. There again means, the same issue arises that they are means, having different dates of closure, but they prepare a special purpose account for means, having it. Even in India means, few years back there are organizations which had means, 31st December timeline. So for comparing it and filing the ITR, they had to prepare a special purpose account for 31st March 2000, whatever the close year. So that means, we have to go by the disclosure requirement, and in this case, the auditing and other means, closure requirements are not there. So those data I feel is means, maybe taken from the units and can be filled up with the ITR.
Absolutely. So income tax returns and income tax audit is very close to all of us, because we all have started through these things in our articleship. So we can go on and on this, but yes, Income Tax Act 2025 is something that is coming up. So due to interest of time, can we take up questions on that? Yeah.
Yeah, okay. So we'll come back to Income Tax Act 25 as we discussed. And just now Ashish ji talked about this foreign assets disclosure. We all know that we have got notices on those assessees who have not disclosed foreign assets, right? In the last ITR, they were given notices by the income tax department and a timeline by December to revise their returns, right? I think we were, at least even if we have not got notices, we have seen the hue and cry in the media on this. Govind, my question would be to you. Okay, and all taxpayers here also, we need to understand also very clearly today what we are talking about Income Tax Act 25, and we think no, this is very, very far sighted. ये तो बहुत ही ज़्यादा आप बाल की खाल निकाल रहे हो, right? All of this was other thoughts, but when litigation happens, it really happens. So Govind, now that is the, again I will come back to 69B. Sir is also there. Sir, we may need your thoughts also on this. In 69B, so 69B specifically talks about in case you have any investments which you did not disclose fully, right? Unexplained investments not fully disclosed in the ITRs. For that, the special rate of taxation is there. The word used is investment, the amount expended, which is not disclosed, right? But this word expended, that has been taken away in 103, ITA 125-103, which talks about where any investments is not disclosed. What is the value of those undisclosed investment if the AO finds out undisclosed investments? Say I have investment in mutual funds, right? 5 years back, I spent 1 crore. Today the value is 5 crores. What remains? I mean, how is it different?
Vivek, yeah, that's a very valid point, because in the new Income Tax Act 2025, that word is no more in existence. So one can also interpret that in absence of that word, the year in which a assessing officer is finding out that there is some unexplained or non-reported investment, one can also take a view that date on which he has identified, he will go for a fair value of those investment. I have made an investment, say in 2015-16, which was for 1 crore, but just because it was not disclosed earlier in Income Tax Act 1961, I was at a risk of 1 crore being added up as an income. But today, since it is a more of an open-ended thing, if the fair value of those investment becomes 5 crore, I am at a greater risk that the assessing officer may take a mileage that I'll add up 5 crore. So yes, clarity has to come, but in the interest of, in the interest of caution or for all the assessee, now it has also become very much relevant that we explore and ensure all the due diligences that such instances are actually not happening, so that we can avoid the greater risk of having a higher amount being charged as income.
So you have spoken about one, aspect, Govind, where the investment value is higher. What about if it falls down?
It is lower, yes. So that too one has to give a thought, but knowing that, revenue thought process, I think they are having a open-ended ball game in the sense that when it is on the higher, they will have a mileage of taking a higher amount. But when it is lower, at least they will, ensure themselves कि कम से कम जो amount of investment था वो तो मेरे को add करना ही है.
So maybe we'll have to see how jurisprudence evolves. If there is one case where they have, included a higher amount, then we'll have to find where they have accepted a
lower amount.
So the same amount where the actual investment goes down. Yeah. So Nirmalji, I will come to you. Now, undisclosed investments. Whenever we talk about undisclosed, under-disclosed investment, money, asset, bullion, jewelry, etc., we come about the source. How does the department find out? And there are various procedures. One such procedure is, sir, 133 capital A, currently survey. And we have seen in the media, now there is some change in this procedure of survey in the new Income Tax Act, right? I think it becomes section 253 of the Income Tax Act. So, on the access code, etc., what are your views on the expectedly expanded scope of survey?
Earlier, when there was a survey or search or seizure, any matter, the department used to gather all the informations from your books of accounts and records. But records means they were trying to gather the papers and other things. But now, since access code they've asked, that means you have lot of digital datas. Datas might be your personal informations also, your Facebook account, all other accounts, or even your computer softwares, all access keys, wherever you are keeping the datas on the cloud. Nowadays, cloud, most of the organizations are keeping datas in cloud. So they will ask where are the cloud keys, they will access all those datas. And the other thing which nowadays a practice that lot of working we do, and we keep the working in the shared cloud, where a team of people within the organization or your outside consultant can access those data points and find out the various reports and other things. But those reports are not final, or those data are not final. But whenever there is a survey and other things and you provide the access code of those data, then they might presume that these data are some valuable data, and they come to some conclusion of adding back or finding some information for data. The better way to keep those data, always give a headline or tag to those data that these are working sheets or draft workings or whatever name you have to write. Like earlier, people used to do working with pencils in papers. The pencil workings department normally avoid. No, these are not final workings, we can't take these. But when it is in a computer and you are writing that provisional balance sheet or other things and something like that, then they can take. Provisional means, yes, there are certain provisions. What provisions are those provisions? But you make, these are draft or these are draft working sheets. So these will help. So I think the data, we need to be very careful about what data we are storing in the cloud, what information we are sharing with the public domain or other inputs in your organization systems and other things. Systems and other things, they normally confiscate and extract the data. But the cloud data and other data, they can't. But now, with the help of this new thing, access code, they have access to all your information within all over, whether the data is outside the country or anywhere. So we need to be very careful in preserving our data in cloud and other sources. and we need to classify those data as per their status.
So a very good point you have put up, Nirmal ji, is on how to store data on the cloud. Now, Girdhar ji, I will come to you. Do we need to understand how to write emails also? Because in corporates, we write an email for even a hi, right? So, one person sitting next to me, I will tell him something to write on email. I will write an email to tell him, okay, you need to do this because it needs to be documented. So, have emails become the new technology loose sheets for the purpose of survey under 133A?
Before answering your question, Vivek ji, I'll just add something to Nirmal ji's discussion, and that's one more aspect. Nirmal ji has advised that to write draft or write the rough sheet or otherwise. I'll just add one aspect where we are working in electronic mode. Supposingly in a pen and paper environment, we can tear off the paper, we can write rough and this thing. But in electronic mode, Nirmal ji will second me. It records and keep with it versions of your all amendments. So where you will escape with the version. Supposingly you have worked, you have changed 10 times, you opened that file 10 times, you have saved it 10 times. It will create, supposingly you are keeping your data even in the Google Drive, you can find out there is activity tab and you can find out 10 versions, whatever in last 10 minutes you have 10 hours you have done. So those versions actually are there, and there is no means to supposingly you are again not connected to cloud, you are working in hard drives. So people used to change hard drives every 3 months, every 6 months, according to the the risk they were taking in business or otherwise. But now this Google server or other basically the shared servers, there you do not again means to change the hard drive. So that aspect also will have to keep in mind. Now coming to emails and the confidentiality about your emails, that's the question I believe. In the new Income Tax Act.
No, just one on this, loosely written emails. Many a times we write and that can be interpreted in a different way, like loose papers. I have written something, officer understands something else, and then there is litigation. So that was the main pinpoint.
So that interpretational basically dispute will always remain, I believe, but how those interpretation or whatever the the content of the email are there, and we all know when we talk about income tax or any investigation or such, whatever the interpretation is there, there has to be some basis or there has to be some corroborative evidence with what we call it the incrementing material as far as these things. So that things or whatever being misinterpreted or rightly interpreted has to be has to corroborated with income, which is as far as the income tax officer is construed to be, it's income escapement. So that escapement of income, whatever you are saying, may be exactly what you have said that been recorded in the email, but now you want to change your statement or change your stance. So that may be a case, but then again if it can be related and corroborated with the evidence, then that will be the right interpretation. If that cannot be, may not be the assessing officer stage, but the higher level definitely you are going to get the relief. So the underlying evidence is more important.
Can I add something?
Yeah.
So there is always a retraction affidavit which can be filed after such search or anything. So those can be filed and stating the actual facts by retracting the earlier version of the documents.
That is one part of the thing, but also this many precedents are there that loose papers as it is, it cannot be held against you until unless, as Mr. Delia has said, it can be matched with the financials, etc. So I think emails also similarly, one email, I think it has to be a incriminating evidence to be accepted as a ground for litigation. So a lot on this, survey and etc. powers. Mr. Sengupta, I would end with you before audience can also, ask questions before lunch is also waiting. On the most tedious part of income tax, that is TDS, right? 71 sections, now there are 3 sections, right?
Right. Now,
So,
actually, there are a lot of buzz going around. I think this is the most discussed area in the income tax 2025. That from 71 sections, right from 192 to 206 CCA, they have brought down to 11 sections, 302 to 402. Now, so TDS has become simplified. So you are asking this only, na? TDS has become simplified.
For a change.
So now what they have done actually, they have in 392, they have replicated 192 in TDS from salary. 393(1) speaks about TDS on payment made to a resident. 392(2) that speaks about TDS payment made to a non-resident. 393(3) that speaks about any person. Payee is any person. And 394 is where no TDS is required. They have kept the same thing. Largely the threshold limits and the rates are same. 393(1), but they have put it in a tabular form. Instead of saying ki tax, TD tax to be deducted at source on payment made to a contractor under section 194C, now you will say tax to be deducted at source on payment made to a contractor under section 393(1), serial number 1, this of the table. So this is the difference. But the good part is that they have structured it. They have put it in a single table. And it is, as many of the speakers earlier told, it is much simpler to read. It is really simpler to read, and automatically it is much simpler to understand. But the ambiguity and the disputes, will it go? It will not go. Because half of the time in our office, what we do? Accounts department send us a bill whether this payment will be under C or J or I or H. These things will never go because the rates are more or less same, the threshold limits are same, the nature of payments made same. So how this will go? This ambiguity and disputes will still remain. So it's a simplified, as per the language, as per the presentation, it is really simplified. However, it is the disputes and ambiguity will remain. What we really wanted, one rate for services, one rate for goods, one rate for immovable property, and one for others, where maybe this other things may come. So if that was the case, and income tax department really, our revenue department has drafted it like that, then the disputes and the wasting of time regarding which payment will fall under which section would have really gone. So at one hand, yes, language is simpler, it is more structured, it is put on a tabular form, but the disputes will remain, ambiguity will remain, and we are going to waste our time like we are doing now for determining which payment will fall under which section. Of course, this will be good for us, the persons looking after tax in the corporates or the tax experts. Definitely good, because if Income Tax Act becomes very simple, then no one will come to us and we will have no value.
So we'll still keep on having seminars like this, right, to understand and interpret issues. Okay, so thank you, Mr. Sengupta. Mr. Delia, you have something?
I'll just like to add something. Mr. Sengupta was telling it simple, very simple income tax, and we are all listening from last 2 years that Income Tax Act 2025 is very simple. But lastly, he has concluded that no, one nation, one rate in TDS also to be there, or 3 rates finally to be there. So it's not so simple. I'll just get reminded of the exam days we all have, particularly the competitive exams. If we at all take this as a simple tax, which never is to be, because it's an income tax. So I used get reminded my exam days that if the question paper is simple, then the assessment of answer sheet would be harder.
Difficult,
If the question paper would be harder, then the answer sheet assessment will be simple. So this is, we all understand. Yes. So that will be, because I'll just conclude that supposingly this is a simple income tax 2025, that we should be ready for something harder assessment to come. And secondly, this simple will remain simple or not, because this baby has just born and may not seen the light of the day, because it's not implemented. It will be implementing in next year or so. But if we'll take the journey till now, how many amendments, how many reports, how many conferences we have seen, that we all are countless. The act has been passed on 21st of September, and maybe many of you knows, on 3rd of September, yesterday only, there is a corrigendum from the CBDT on the same act. So again they have replaced many of the words, those are clarificatory, but corrigendum is there yesterday itself on the same act. So in my most humble understanding, and I am waiting for the income tax bill 2026, which is the finance bill 2026, which will give the final say to this income tax act. So I am of the understanding that finality of the income tax act 2025 will be able to see after the finance bill, and that will be having much amendments and discussion, and there we will get the actual finance act 2025.
Right. So we'll ask the audience if we have few questions. We can take 1 or 2. Yeah, at the back, Ashish.
The mic maybe.
Good afternoon, everyone. Thank you to the panel for a wonderful session. Now, my first question from the initial speech of Vivek ji is, he had mentioned about 43B. Now, the section states the number of years for a long-term capital asset to be 3 years, whereas as per the amendment, now the number of years is 2 years. Now, in the entire act, only 3 years is specified in section 43B. So what is your take on that?
Please, 43B.
Slum sale, sorry, not 43, 50B. 50B, slum sale, sorry.
So again, this is very specific to 50B, and that is to be construed for the purpose of that section only, right? So that is very, very specific. As of now, I think we have been taking that positions.
So like, is it a mistake or an area not looked upon by the new act, by the new bill?
I would not say a mistake at all, because whatever it has been passed by the Parliament. So the Parliament, in its best wisdom, has passed the act. So we can only interpret an act as it is there, right? And thereafter, we have to see how jurisprudence evolves on that.
Okay, just one more question. The utility which has not come up for ITR 5 and 7, and for, say, example, the due date is 15th of September itself. So, can we expect any extension of dates?
I believe the Excel utilities have come. No, ITR 5 Excel utility has come, 7 it's not come.
Not come.
So, extensions are already there on papers. It should come.
Thank you.
Anybody else? Okay, so everybody is waiting for lunch now. Sharbani, over to you. Thank you.
Thank you. I request our chairperson to please present mementos to all. Mr. Banerjee, Ashok Mukherjee sir also please join. To present mementos to moderator and the speakers. To Mr. Govind Mundra. I request Mr. Jalan to please present a memento to Mr. Govind Mundra on behalf of the Bengal Chamber. Yes, Amani Crafts. Yes, they have given some bags for all the speakers. To Mr. Nirmal Meheria. To Mr. Gautam Sengupta. Mr. Giridhar Delia. And also to the moderators, Mr. Vivek Jalan and Mr. Ashi from M Junction. I request all the delegates and the speakers and moderators and distinguished guests to please join for lunch. The lunch is at the 3rd level at the Bengal Lounge. We will resume again at 3:30.
Well, Vivek ji is coming, so we'll begin then. I'll just give a brief introduction of mine. My name is CA Ishan Tulsian. I am a partner at R. Tulsian and Company. So my company is a CA firm, which is a multinational firm which has offices in 6 countries. In India here, we've got branches here in West Bengal and in Sikkim, and we've got our own offices in the Middle East countries, such as in Oman, in Qatar, in Bahrain, in Dubai, in the US. So I am also an enrolled agent, so I look after the US taxation as well. So I can practice income taxation in the US, and we represent our clients before the IRS there, as well as I practice GST. At the same time, Vivek ji, are you? We can sit. So, good afternoon, ladies and gentlemen. Let's try to make this session very interactive. I would like to extend my heartfelt gratitude to Vivek Jalan ji, the chairperson at the tax committee, the Bengal Chamber of Commerce and Industry. I would also like to extend my heartfelt gratitude to Sharbani madam and to the entire team for having invited me over here. So as I requested, let's make this a bit interactive. I have put in more than 100 slides, but I believe I have just 45 minutes to 1 hour. So whenever you have a question, you can ask me, and let's try to make it interactive. What I've done is I've tried to put in screenshots of real life notices of our clients in certain burning issues, since the time is the paucity year. So we won't be able to deep dive too deep dive into a lot of topics, but we'll try to cover a lot of topics. So if you have any questions, you can ask me here. Even we can take it off the dais and we can stay connected. So let us see the first issue. That is the demand for reversal of ITC due to non-receipt of goods. That is violation of section 16, subsection 2, clause B of CGST Act. What does this mean? This means that, do we all know there are few conditions to claim input tax credit under section 16, subsection 2, right? What are the conditions? That we should have a tax invoice or a debit note. Second is that the goods should actually be received by us, or the services should be availed by us. The third should be that the tax should reach the government exchequer, either through me, through RCM, or by the supplier. That is section 16, subsection 2, clause C. We will see that also. And the second one, which I spoke about, the goods actually reaching us in either a principal place of business or additional place of business, or as per our mandate to a third party place, right? That also needs to be fulfilled for the recipient to claim input tax credit. What is the fourth condition? That the recipient should file his GSTR 3B. The fifth condition, which has come from 1st of January 2022, can anyone tell me? That the purchase invoice should be available in GSTR 2B, very nice, of the recipient, and it should be uploaded by the supplier in his GSTR 1. So right now we are talking about the potential violation of the second clause, right, which is the non-receipt of goods. Let us see. I have clubbed in few notices which are of the same mandate, where the goods have not been received due to other reasons, different reasons. Let us see the first reason. This is a screenshot of a client of ours from an audit discrepancy notice from Rule 101(4), where a departmental audit is happening under Section 65. So they have put together all the discrepancies which they found. One of the discrepancies are that the purchase invoices vis-a-vis the vehicle number, they are not matching. They are saying, as per our analysis, these truck numbers carrying your goods invoiced to you, these trucks have not passed any toll point. If the goods are coming from, let us see the second column here, which I have highlighted. The goods are coming from Singhbhum, which is Jharkhand, where to Howrah, West Bengal. There are toll points, right? So those toll points, they say that the vehicle has not passed. What does that mean? That means, as per them, that the truck has not reached us. That means that it may be a case of either the supplier not being existent, or fake invoicing, or that I have not received the goods, plain and simple. So they are saying violation of Section 16 subsection 2 clause B. Simple, you've not received the goods. Why will I give you the input? Now in this particular case, we will see there are several slides where I put in the documentation evidences which we should have compulsorily to safeguard ourselves during litigation. These are litigation points. These are litigation points. These may not be of the current time, because before 2019, fast track was not there. So before 2019, 2017, 18, 18, 19, there were very few evidences which we may still have. Because payment slip we may tear and throw. Consignment note we may tear and throw. Goods operator receipt, just delivery challan we may tear and throw. Right? And even if we send a staff to the border control, to the toll point office before 2020, all the documents which were not computerized, they're all gone and thrown away. So it becomes very important for us, for the past period also and for moving ahead the future period also, to maintain a list of documents to prove our case that the goods reached our principal place of business, additional place of business, so that we are entitled to claim the input. We will see that. This is one of the cases where they are saying that the goods have not reached because toll point they are checking. Second is, let's see this. They are saying that, sir, can anyone tell me if the purchase invoice for me, sale invoice for my supplier is dated on 28th of August. I received the goods on 1st of September. In which month should I be able to claim the input tax credit legally under Section 16 subsection 2 clause B? Can anyone tell me, either in the month of August or in the month of September? In the month of August, August has my purchase invoice date, 28th of August, but the goods have been received on the 1st of September. Very good. It should be the date or the month in which the goods have actually been received by us, right? So ideally now what is happening is, due to lack of internal controls, we don't have a material receipt note. Means when the goods come in, there should be a guard or there should be a store manager or someone to draw a material receipt note and a stamp that the goods have reached us today. We will enter in a tally on the same day, or cloud tally. We will put someone in our godown, in our foundry, in our third place, where right when the goods are coming, he will make the entry. But there is no such internal control. There are many other documents also which we'll see. What is the department contesting in this? Let us see this. The department is contesting, if we can see the first column, the third column from the left, these are all these purchase invoices which are dated in the last week of the month, 24, 25, 26, 27. Now if goods are coming from Surat, per day how many kilometers are allowed in e-way bill? 200 kilometers? If, for example, purchase bill is dated 29th of August, and goods actually are received on the 2nd of September, but I don't have any evidence as on when my goods are received. So what happens during departmental audit? During departmental audit, the department will say, "Acha, which is the last date that the e-way bill is getting expired? It's on the 2nd or the 3rd of September. Kindly prove, you are saying you have claimed the input in the month of August. You are saying the goods were received in August. Where is the proof? If you can't prove to me right now, kindly pay interest of early claiming of input for 1 month at the rate of 18% per annum. Simple case. They are saying, give me the proof. If you don't have proof, what proof? Where is the e-way bill? Where is the tax invoice? Where is the consignment note? Where is the delivery challan? Where is the payment slip? Where is the material receipt note? Where is the store register? All of those things, if they tantamount and cultivate into me being able to prove that the goods were actually received on the 29th of August, I may be saved from the impending interest cost. But who even keeps these documents? In practical, what we see in practical business, back in the day, that these documents were not available. Let us see this third one. This is quite prevalent. This malpractice was quite prevalent before 2019-20, maybe up to 2020-21 also, in foundry industry, steel, castings industry. What used to happen that, let us see this. What is happening here? Industrial Iron Casting is the purchaser, my client. Neo Steel is the supplier. Neo Steel is sending the goods, selling the goods to Industrial Casting, Iron Casting. Where should the goods come? The goods should come to the premises of Industrial Iron Casting. But the goods are going to a third party premise. Where? Chandra Alloy, some other person. Why? Because as on that day, there is a big nexus in the foundry industry. As on that day, Iron Casting did not require that particular material. So this is sent to, for example, Chandra Alloy, third party. Whereas the invoice is in my name. Shipping address is in my name. Billing address is in my name. And then 2 days later, Chandra Alloy or through some other wire nexus, the truck is coming and giving me the same plant quantity, received quantity, everything which is matching my particular invoice. Now, where has this been unearthed from? These are live cases which we are seeing from our anti-evasion and DGGI for our clients. Now, there was a search and seizure on an inspection at some vendor's place. He also used to run a transport business. So, in that transporter's premise, they got a transporter diary. In the transporter diary, they found this. What they find? It was invoiced in the name of Industrial Iron Casting. Who invoiced? Who sold? Neo Steel. But where was it sent? It was sent in abbreviation, one name was written, Chandra. But it was not iron. It was not Industrial Iron Casting. So these are again what? These are handwritten documents. These can again be contested. As Vivek ji and the entire learned panel, they were discussing in income tax cases also. These may be called as dumb diaries. These may be called as loose papers. These may not be admissible until and unless it is corroborated by external evidence. Where is the driver's testimony? Where is the third party under oath? Where is he testifying that I have taken it there? So there are many case laws here under income tax jurisprudence, GST, pre-GST jurisprudence I put here for your reference. Now, what was I talking about? What documents do we need? These two slides are quite important. All those 3, 4, 5 cases which we've discussed, if we have all of these or a substantial portion of this, we may be able to defend ourselves before the GST department. Maybe in today's time, since GSTAT has not started operating, so at the department level, even at the commissioner level, we have come across circumstances, nothing taken away from the department, that they are a little more prone towards revenue. They may not allow input tax credit. In these cases, they may say that the supplier is non-existent, supplier is fake, that supplier is indulging in any fraudulent activity. You've not received the goods. So we will have to collect and collate all these documents. What are these documents? That Industrial Iron Casting needs to have purchase invoice. Sir, purchase invoice से क्या होता है? Purchase invoice तो कोई भी बना लेगा. He needs to have e-way bill. Sir, e-way bill भी तो 2017-18 में तो था ही नहीं. 2018-19 when did e-way bill begin? 3rd of June, interstate in West Bengal. 1st of April, interstate. So, before or up to that, e-way bill was not there. Okay, what is third consignment note? Bill T, LR. ये भी कोई भी बना लेता है. We give it to the department, like ये तो ऐसे बन जाता है. Then, what do we give? The vehicle registration numbers, we download it from the Parivahan website. We have to go to this extent, saying that the vehicle was existing during that time with a proper license and an insurance and with national permit. What else do we have to give? What else do we have to give? We have to give bank receipts where we have made payments to the creditors. They will still not believe. Then we will have to what? What do we have to do? We will have to make this kind of a table. What does this table say? Just a moment, please. Thank you. Thank you for your patience. Let us see this table. What do we have to prove? From the point of purchase, then received, production happened, point of sale further, the entire nexus and trail of goods we need to prove. This is from an excerpt from my article which was published in GST newsletter. This was fortunately circulated with senior departmental officers, even with the MPs and the state cabinet ministers. Here, as you see, inward quantity is 80,730. kg, 80,730 kg. We need to prove that Swastik International, we purchased through 4 invoices, we sold through 5-6 invoices with Sri Hari Steel. How much did we sell? 75,590. Remaining is 5,140 kg of scrap. Next year we sold scrap. We need to show the entire trail. Still they will not believe. They'll be like, oh, you know, we don't have any proof. Then what do we need to keep? We need to have material receipt notes that the goods received against these purchase orders, against these delivery challans. It even goes to the extent that you take photos of the trucks when they are unloading with their vehicle number, so as to have some evidence that this vehicle exists, this vehicle as on this date with timestamp has delivered our goods. It's going to that extent. So I have mentioned a list of all of these documents which I believe we use in our cases. Still, we may get a biased or we may not get a completely assessee favorable order up to the commissioner level here. We may wait till GSTAT is formed. But I'm sure if we have most of these documents which we have spoken about, this we are talking about the supplier side, the sellers, the customer side also, I have put in all these documents. Also, we have gone to the extent of giving copies of ledgers of power, fuel, electricity. That during this period of time when the goods came, you are saying goods did not come. How is my fuel, electricity of the same cost as previous year at this time? If I didn't have goods, it would be shut. So these are circumstantial evidences. Okay, I have also given a link of this article where I have put all these examples with more than 10-15 case laws, which we usually use in appeals for your perusal. So it is a hyperlink, you can click on this, since obviously we cannot discuss all the case laws. These are also pre-GST case laws where they are saying that if the supplier has not received goods, it is not a mandate that you will also not receive goods. Your supplier can be fake. But now, what is the current jurisprudence? There is a Supreme Court case law of Ecom Gill Coffee Trading Company. What does it say? The Supreme Court, the department quotes this. In their objection, in their order, they say that only invoice or only bank statement or only e-way bill is not sufficient. You need to give all of these documents which we just discussed. Consignment note, LR, the details of vendors, the vehicle numbers, all of those details you need to give circumstantial evidence, then only we may believe. So there are several other case laws also we mentioned in that particular link. There is one more case, let us see this. What can we see in this slide? This is from tally of a foundry client of ours who's quite big, right? But see the fallacies which they're having in their accounting which led to a notice and which led to a seizure of 7 crore of stock. But what was the point? The point was the raw materials, pig iron is mentioned, where the source, but there is no production entry passed. There is no production entry passed. Now what happened is on the 18th, if you can see on the top line, 18th of March 2025, with an INS-1, the investigation department, anti-evasion, they came up and they were like, sir, we have got tip that you are purchasing goods from fake suppliers. We want to do physical counting of your stock, physical stock with your book stock. Now, sir, what will happen? Now, let us see this example as I just showed you. Raw materials are there in the books, finished goods, production entry has not been passed, so finished goods is 0. But physically on the production floor, if it is not sold, the physical goods would be there, but raw materials will not be there. They drew up this release order later, after 2 months of getting behind them. What did they do? Let us see this highlight. That particular finished good of BB14. What is happening? Let us see the third column. What does the third column say? Number of goods closing stock as per books. As per books, no production entry passed. Only one finished good. But physically, how many goods were there? 230. Because production entries, even though not passed, but on the production floor, those finished goods were made. They seized 229 of them. Just because we did not pass the production entry or we did not keep it updated. What does that mean? That means that we need to regularly update. What does the GST law say on this? Rule 54, sub-rule 14 or 13. What does it say? The company assessee, the taxpayer should have monthly production accounts. But it does not say that you need to update it monthly. You need to update it regularly so that if, God forbid, if any time, if some anti-evasion or DGGI comes with an INS-1 inspection, and if they do, they will always do your stock counting, because this is the biggest gap which they usually get. If your production entries are not passed, your finished goods are not there, they will withhold that. And then they will say that your raw materials are there in books, but your raw materials not there in physical. So you will have a double whammy. This particular client was an army defense provider, supplier, but his goods were seized of 7 crores. For 2 months, he had to stop his production. Then we had to file a writ because the state GST department was not letting this go. We had given so much of plea with more than 100, 200 pages of reconciliations as per us. He himself is saying if he does the reconciliation of grade 1, grade 2, grade 3, grade 10, it would take him 10, 15 days to do the actual perfect reconciliation of his own stock. Department comes in 7 hours they do reconciliation, say it is very scientific. So there are many case laws to contest that also, that you are not scientific, you are not technical, how can you do it in 7, there are more than 10,000 codes, how can you do so? But, you know, so what I'm trying to say, see, this is the notice. So where did the tip come from? They would not just come and barge in, just say, oh, acha, there may be a physical, or they should have reasons to believe. What was the reason to believe? You are purchasing goods from 1 or 2 or many fake suppliers. So that's why they come in, and when they come in, they have the authority to check everything. And when they get into your stock counting, then that becomes another point of dispute. Okay, now what happens is during investigation, what happens, as we were just talking about INS 1, barge in, stock counting and everything. For example, they come across, I have not added that particular notice, but for foundry clients of ours, steel clients of ours, what's happening? These suppliers, the job workers, they are charging how much GST? What is the GST, current GST, before 22nd of September on general job working? Can anyone tell me? It is 12%. But due to lack of knowledge, the general job workers, they are charging 18%. Most of the people are doing. No problem, I am paying 18%, I am claiming 18%. Paying 18% is never a problem for the government. Claiming 18% where HSN tells 12%, 6% extra ineligible you are claiming. Give me a reversal of that. Means that's ineligible. And what about the 6% extra which you have paid? Get a refund. Either you or your supplier. Sir, 2 years have passed. I don't care. What is the time limit for applying for refund of excess tax or payment is? 2 years from the date of payment. 2 years have passed. Audit happens 3-4 years later. But they will catch like 6% extra. Let's bring that case here. I have, what have I done? Okay. I have charged, for example, I was to charge 18%. Let's take the other way. I was to charge 18%, I charged 12%. Okay. Now what is happening is I am going to raise a debit note. The department will like pay, whatever. Do you have to pay right then? Can anyone tell me? Without the issue of a show cause notice, without the issue of any pre-show cause notice DRC 01A, do you need to make payment before the issue of any of these notices? During the course of investigation, I'm not just talking about the day of inspection, 10 months, 12 months, 2 years investigation is going on, but adjudication process has not begun. Are you bound under GST law to make any payment during these 2 years before the initiation of adjudication proceedings? Can anyone tell me? We are not, sir, we are not. This is the departmental circular which came out, instruction number 01/2022-23. Main mudda kya hai? Don't need to read all this. Main mudda kya hai? Until and unless adjudication proceeding begins, there is no recovery of tax. When does recovery of tax happen? First, investigation, inspection happens, search and seizure. Then, investigation carries on for some time, 2-3 months, 1 year. Then, show cause notice comes out in section 73 or 74. Fraud or non-fraud? Fraud. Show cause notice comes out. We reply within 30 days. Order comes out in 30 days. Then, what happens? We get 90 days to appeal. Plus 30 days for condemnation, 120 days. We appeal. Until now, how much money we paid? Only the appeal pre-deposit. Only the appeal pre-deposit, na. But if the officer is putting a gunpoint and saying, I will arrest you, you have more than 2 crores of default tax. You pay right now. So are you bound to pay, yes or no? Legally, no. But many people, to buy peace, to buy goodwill with the department, they pay under protest. They pay. If when we'll get the entire thing, we won't have to pay interest. 10% is the minimum, that pre-deposit which you have to pay. People pay 100%. We don't want interest. What I am trying to say here, you can make payment anytime voluntarily under DRC 03, no problem. So what is happening is that in this particular case, I have made payment, I had to pay how much? I had to charge 18%, I charged only 12%, classification error. 6% debit note I issued, I paid. During investigation, I paid. I said, kya karna hai? Debit note issue karna hai 6% ka, I'll collect tax, I'll pay. Khatam. Now, theek hai, I have done debit note, Classification error, I had to collect 18%, I collected 12%, 6% I collected more, I gave to the department. Debit note is one of the documents to claim input tax credit under section 16 subsection 2 clause A. We all know, first condition we just spoke about. The recipient, can he claim input tax credit in this? This is during investigation. Inspection, investigation, show cause notice has not been issued. Yes, very good point. Let's come to the next slide. What did sir say? Section 17 block credit bars this. Why? Because in most likelihood, the notice which is to follow a few months later will be under section 73 or 74. Which one will they issue? They will do investigation, then they will say, no, by mistake, you did not pay. Or they will say, no, fraud, willful misstatement, suppression. What will they say? 74. So, what does this section say? Block credit, section 17, subsection 5, clause I. That it blocks ITC in respect of any tax paid in accordance with, see the words, in accordance with section 74. Now let's come to the rule. In accordance with का मतलब नहीं समझ में आता हम लोगों को क्या होता है in accordance with? Show cause के पहले, order के पहले, show cause के बाद, investigation के time in accordance क्या होता है? We don't know. Let's come to the rule. Rule 36, sub rule 3. What does it say? It's said clearly. What does it say? When the demand is confirmed and an order is out, if you have paid tax under section 74, fraud, you will not be able to get credit. The rule clearly says. So what's the dispute? During investigation, if I make any payment, voluntarily, for example, classification error, my recipient, he is getting harassed because the department is saying this is to under 74 in pursuance of 74. But what is happening is, he will take up this rule 36 sub rule 4. He says that, sir, where is the show cause notice? He's like, okay, today I issue the show cause notice. He claims it tomorrow. Sir, he will say, where is the order? So what am I trying to say? Until and unless an order comes out under section 74 subsection 10, which is fraud, willful misstatement, until the order, demand is confirmed, if we pay tax, supplier pays tax and recipient claims the input, he is eligible to claim the input. सबसे बड़ा मुद्दा यही है, ऑडिट में 50 लाख रुपया टैक्स पेमेंट कर दिए, लेकिन वो 50 लाख क्या था 3 साल बाद में, नेक्स्ट ईयर का 30th नवंबर पार, टाइम लिमिट इज गॉन, कैन आई क्लेम द इनपुट? बहुत जन लोग बोलते हैं नहीं, आरसीएम का कितना सारा होता है फॉर जीटीए, वी कम टू नो 2-3 years later, can we claim it? We can claim input because show cause notice has not been issued. Even if it's issued, order has not been issued yet. So 36 sub rule 3, this comes to our aid. There are case laws also which I have put here. You can see this. Main mudda yahi hai. Now for imports, if we do some classification error, bill of entry we file, we pay 5%, but it is 12%. Later on, we make the payment of 7%. Can we get the input? Yes, we can get the input. No issue with that. Okay, can anyone tell me, abhi jitna apne baat kiye, when we are making payment during investigation, voluntary, nobody can force us to make payment during investigation. First thing clear. We are making payment 30 days before the, 30 days, we are making the payment voluntarily before the issue of show cause notice. Second case. Third case, we are making the payment 30 days from the issue of show cause notice. Fourth case, we are making the payment 30 days after the issue of the order. Sabhi case mein kar diya. Appeal ke time mein bhi payment. Koi bhi, all cases in GST. Can I use my electronic credit ledger or do I have to compulsorily use electronic cash ledger to make the payment of tax demand? Very good. We did not have clarity until a few years ago. The state department, center department, they used to jump and they will like make the payment through cash. You would not believe this. There's a big listed client of ours. Until last month, his old consultant, he was making the wrong set-off of input tax credit. That is section 49, section 49A, rule 88A, right? So what they were doing is they were making payment in SGST, means estate tax. We took over the file. We saw 1 crore plus of SGST credit. So what happened? We utilized that as per the order. He got a call from the next day, 21st of the next month after the GSTR 3B filed, he gets an informal call from the state tax department. Sir, where is the tax? You pay 50 lakh rupees for the last 3 years. There is no cash payment. Payment is happening. Payment is either through credit ledger or cash ledger. We all know that. But where is the nakat payment? They called them, the accountant. We did not go the accounting, just took the printout of 4988A. He said, this is the manner, gone, no problem. These are tactics. What I'm trying to say is, now tell me something, if we are not sure, for example, to claim input tax credit or not. For example, we just spoke right now, investigation, we spoke about classification error, 12%, 18%, all that. So I am the recipient of that. I'm not sure कि भाई ये मतलब कि क्या होएगा नहीं होएगा, सर बोल रही है ठीक है, बट सर इतना बोलती है तो क्लेम कर लेती है बिकॉज 30th नवंबर तो आने वाला है. दिस इज द केस ऑफ 24-25, 30th नवंबर आने वाला है. आई विल नॉट बी एबल टू क्लेम इट. सो टुडे आई क्लेम दैट पर्टिकुलर अमाउंट बिकॉज सर इज सेइंग, he claims that. Now what happens is, if he utilizes it, then it becomes the case of payment of interest. So what I tell my clients, if you are not sure about any input, you claim it, but don't utilize it. तब client बोलता है कि सर practically possible कैसे है, हम तो IGST claim किए 1 करोड़ का, IGST input तो सबसे पहले set off करते हैं, तो utilize होना ही है, हम CGST IGST को थोड़ी बढ़ा करके रखेंगे. There is one circular for this. This circular 19204, what does it say? 1 crore of IGST input if I've claimed. Today department says कि सर जो बोल रही है उसका सुप्रीम कोर्ट का ऑपोजिट जजमेंट आ गया है, आप गलत किए, यू हैव टेकन रॉन्ग इनपुट टैक्स रेट ऑफ 1 crore rupees. तो उसमें क्या बचा तो सकता है? I tell him you utilize the IGST, but ensure IGST plus CGST plus SGST is above 1 CR. From the date you claim the input till the date of such a particular thing. So what does this mean? This means there is a circular which says that IGST input, if you have claimed incorrectly of any amount, you need to have IGST plus CGST plus SGST all combined more than the ineligible amounts. If that maintains from that day, no incidence of interest. तो claim करके बैठिए ना, what is the problem? Claim that 1 crore rupees of IGST, if you can plan it that way. Now many clients of ours, they ask us this practical issue that sir business बंद हो गया है, हम लोग जयपुर में खोले थे, अब यहाँ पर पेपर का है, वहाँ पर कोल का है, अब जयपुर का सर तो अभी मार्केट बहुत खराब है and all that, so we are about to shut it. We have a lot of input tax credit stored with us. Input tax credit, if claimed properly with compliance of all the conditions, if it's not ineligible with due time 16/4, it's a vested right then, right? I fulfilled all the conditions, so it's money for me, right? Up when I have to close the particular business, my first question comes, 1 crore का मेरा cash पड़ा हुआ है credit में, मेरा कोई sale तो होने वाला नहीं है, how do I liquidate that? Can I take a refund of this? Can anyone tell me? Can I take a refund of an unutilized input tax credit under GST? Which are the two cases? One is zero rated export and second is inverted duty structure. We know that section 54 subsection 3 clause 1 and clause 2, right? ये केस में बहुत क्लाइंट लोग बोलते हैं सर मर जाएंगे, ये तो बोलते हैं कि आप इसको रिवर्स करो, ये तो बोलते हैं आप रिवर्स करो इसको, section 49 and all that, कि if your business is shutting, you have to cancel your GST registration, reverse the entire input tax credit. 1 crore rupiya I will reverse because I have that much of stock or capital goods. Now you would be surprised to know that there is one particular case law, Sikkim High Court case law, that is allowed for a refund in SICPA, this one. Even though, now what is the main contention which they said? They said that see, nowhere in the law it is mentioned that you cannot claim a refund in such a case. So even though section 54 subsection 3 says there are only 2 cases, but this particular case law, SICPA India Private Limited in Sikkim High Court, this allowed 4.37 crores of unutilized input tax credit in case of shutting of business. On this particular thing कि pre-GST era में चलिए मिल जाता था etc. and all that, they have relied on Slovak India trading. This was affirmed by the Supreme Court. They used to say that unutilized SENVAT credit, it was nowhere mentioned in SENVAT credit rules that explicitly that your refund will not be given. So they took that mandate and they say that in GST, where is it mentioned specifically that in case of refund, closure of business, you will not get refund. But specifically in section 54 subsection 3, 1 and 2, it says zero rated and inverted duty structure. So this was a very favorable judgment for the SSS. But why am I mentioning this? Why am I mentioning this? I am mentioning this because this is going to be contested in the Supreme Court. This is a temporary relief. It's not a permanent precedence. But at the ground level, you may not get. If your business is shutting today, please apply for refund. It will get rejected. Let's wait for the Supreme Court judgment. So we can rely on this particular thing. Reversal of ITC on goods lost or destroyed. Can anyone tell me if I have fire in the factory, my entire stock is scrapped. Scrapped means burnt, and there is 0 rupees of scrap which I have sold. Entire thing is burnt. Usually, what do people say? People say, the consultants, they say that this is blocked under 17 5H, you have to reverse the entire input tax credit because goods lost, stolen, destroyed, written off, or disposed of by way of gift or free samples is to be disallowed. Now, what's the other, what do you say, legal interpretation which is coming out in the legal fraternity? It is saying, let us read the heading of this particular section, section 17, subsection 5. Input tax credit is not available in respect of this which is block credit, is not available. If I had this credit of this stock claimed on, I was eligible to claim on the 1st of April 2024. At that point in time, I fulfilled all the conditions, I claimed it. 1 year later, some event happens, it does not mention about reversal. You have to reverse. It says that it can be interpreted that at the point of time of claiming, input tax credit is not available on these. But if it is available, I have claimed it, later on, I can take the interpretation that we don't need to check it again and again, or some event. In Senvat, in pre-GST era, this rule used to be there, that you have to reverse, but here is not available. So there is no precedence as such, but there are, you may, if you say, you may claim this, but don't utilize it. Now, input tax credit on TR6 Challan. Now, what is TR6 Challan? Can anyone tell me? If you have to make payment of any additional IGST, right? When we are importing, for example, it's a classification of 12% IGST, I pay 5%. I have to either get my bill of entry reassessed or I have to make just the payment. For all those cases of 9610, where people used to get the imports under advance authorization and then they made the exports with payment of IGST up to a certain point in time. Now when they were rationalizing that particular section, so they all made the payment in TR6 Challan. Now once they made the payment, the department, they are coming up and they're saying that this is not a prescribed document in your Rule 36, Sub-Rule 1D, Clause D. What does first Section 16, Subsection 2 Clause A? We already know, tax invoice and debit note. वो सबसे पहले दिमाग में आता है ना, but what else is mentioned here? Any other prescribed tax paying document. If you have, then you can claim the input tax credit. What does the rule say? Rule 36 sub rule 1D. इसमें क्या बोलते हैं? D, clause D में bill of entry in case of IGST payment on imports, right? Or any prescribed document for the assessment of IGST on import. Bill of entry or any other document जिससे IGST assess होता under customs. Right? You can take that. Now, as we know under Customs Act, section 17 and 46, the document, this is under self-assessment again, but the document on which assessment happens, self-assessment happens is again the bill of entry. TR6 Challan is not a document on which custom IGST is assessed under Customs Act. So, अगर आप strictly by law देखेंगे तो TR6 is not a document on which you can claim input tax credit. लेकिन आप ये चीज सोचिए, करोड़ों, 10 करोड़, 5 करोड़ रुपया में पेमेंट किया, क्योंकि मेरा कुछ भी गवर्नमेंट का रैशनलाइजेशन आया जो भी TR6 से, मेरे को जमेला में नहीं जाना है, बिल ऑफ एंट्री रीअसेसमेंट. I have made the payment, there is no dispute about making the payment, there is no dispute about the eligibility of this credit. Can I claim this or not? Ideally, I should be able to. It will be a big whammy on my business. So, here there are few key arguments which are mentioned here, like in the pre-GST practice, ITC was permitted. Even under the earlier tax regime, ITC was permitted on the basis of TR6 Challan, despite them not being specifically listed. Again, second thing I said, they say that you need to have some other tax-paying document. This is generated by the government, it's a government Challan. What other document can I get? Those documents can be doctored. How can a TR6 Challan be doctored? I made the payment. So, these are few supporting arguments, even though here we've got few cases also, pre-GST cases, where credit cannot be denied if service recipient and tax payment are undisputed. Second is procedural lapses should not defeat the substantive rights. However, the GST law has a different view on this. Sir, कुछ भी बोले, GST law को follow करना है. What does GST law say? GST law in circular, CBIC circular 16/2023, what does it say? It does not recognize TR6 Challan as a document for ITC. So circular बोल दिया, binding on department, whether binding on me? No. Whether binding on High Court, Supreme Court? No. It's not binding on the courts. So if tomorrow, यहाँ पर Madras High Court, stay order has been provided in this particular case of data patterns, where tax has been paid, IGST has been paid by TR6 Challan, but they have challenged the department's refusal of giving input tax credit on that. So we can again, there is an advance ruling, adverse advance ruling also. So see, what is the best case scenario is that you get your bill of entry reassessed. But in case if you already made the payment, you're not going to let go of that particular amount, right? So you can rely on these case laws. Can input tax credit be denied to the supplier for non-payment? ये तो सबसे बड़ा मुद्दा था 17, 18, 18, 19. सप्लायर भाग गया, बंद हो गया, दिवालिया निकल गया सप्लायर का, चोर निकला, फेक सप्लायर, retrospectively cancelled. In those cases, what? I paid 1 crore rupees to him, he disappeared. Then what will happen? The department is coming to me saying that the supplier has not filed his GSTR 3B. So the government has not got the money. So reverse the input tax credit. So see, these are previous cases. Previous cases माने क्या हो गया? 17, 18, 18, 19, 19, 20, 20, 21, 21, 22, 22, 23 up to 1st of October 2022 when section 41 came out and 26 December 2022 when rule 37A came out. Up till then उसमें ये मुद्दा ये सब चीज चलता था क्योंकि उसके बाद तो लॉ क्लियर हो गया when section 41 came and rule 37A came. क्या रूल है? Can anyone tell me section 41 rule 37A? Can anyone tell me? आज एग्जांपल लेते हैं, आज अपने खड़े हुए अगस्त 2020 सितंबर 2025 मेरा सप्लायर, मेरे को कॉन्फिडेंस नहीं है कि वो पेमेंट करेगा, बट आई हैव क्लेम द इनपुट टैक्स क्रेडिट 1 crore rupees. My supplier has not filed the GSTR 3B return. Hypothetically, अभी तो 6 महीना बाद में क्या, अभी तो 2, if he does not file 3B, he cannot file 1. If he does not file 3B or pay tax in 6 months, he is again cancelled his GST registration. Hypothetically, it is 30th September 2026. मतलब अगले साल का 30th September. I am standing on that day and I am seeing my GSTR 2A. This is 2A. There is column number 18 in GSTR 2A. What does it say? Filter whether supplier has filed his 3B or not. No, still no on 30th of September 2026 for an invoice of September 2025. I see in my GSTR 2B, in their table, table 5 of GSTR 2B of September. This is ineligible because supplier has not filed his 3B. But I knew it from September 25. मेरे को input reverse कब करना है? September 25 में कि 30th November 2026. September 2025, whether I need to reverse the input, I know that the supplier has not filed his 3B because it's showing in my 2A 2B. But I wait out. I wait up to 30th September next year. And still I see. So, क्या law क्या बोलता है? Rule क्या बोलता है? Rule 37A, section 41, subsection 2. क्या बोलता है? कि you can wait up to 30th September of the next year. You don't need to reverse immediately. But if you still see that the supplier has not filed his GSTR 3B up to 30th September of the subsequent year, go to your October GSTR 3B return and please reverse the input tax credit before 30th November. Is this a permanent reversal in table 4B1 of GSTR 3B or table 4B2 of GSTR 3B, temporary reversal? Can anyone tell me here? Excellent, sir. Excellent, sir. Temporary reversal. Why? Why temporary reversal? Oh, wonderful, wonderful. Once you claim credit, reverse it. There is no time limit to reclaim the input tax credit in which cases? Which are the normal cases? One case we just discussed. Second case. Oh, wonderful, wonderful. Which is the third case? Which is the third case? Goods have not been received yet. Invoice is there. Auto populates in my table 4A5. I reverse it in 4B2. Goods are still not, hypothetically. 3-4 cases. Circular 170. What does it say? Circular 170 from August 2022. It changed the entire face of GSTR 3B. Temporary reversal came in. Temporary reversal. If your supplier does not pay his GSTR 3 tax in his GSTR 3B, reverse it. But not now. Reverse it on 30th November. Avail the government's money for 1 year or for as long. I'm not advocating that, please. I'm not using this forum for that. But the loophole is that you will not be required to pay interest on the input claimed in September 2025. Government has not received the tax in September 2025. Government has not received up to 30th November 2026. And you reverse the input tax credit on 30th November 2026, no interest to be paid. So that is the law. That is Rule 37A. And this Section 16 subsection 4 time limit 30th November, it is not applicable in this, as esteemed sir mentioned, that reclaiming this section 16 subsection 4 does not debar it. So these case laws I put, these are all old case laws. Everyone knows this. Let's not spend time to discuss this. I have put again the link, hyperlink of my article published again in ICI GST newsletter, again circulated with 5 lakh CAs and fortunately was read with the, by the parliamentarians and other people. You can please go through this. I mentioned more than 20-25 case laws here which we use for appeals for this particular dispute. Sir, this is again an extract which we are discussing. This from the State Department. What are the cases? We don't even need to see this. If you have done GST, any bit of litigation, first case, 2A, 3B, mismatch. Second case, supplier GST registration cancelled retrospectively. After that day, reverse all the input. Third case, what? Supplier has not filed his GST at 3B. Fourth case, exempt supply, taxable supply merge. Where is the reversal of input tax credit as per rule 42-43? Fourth case, POS, place of supply outside West Bengal. Sir, I'll give you one case, genuine case, but a harassing case by the State Department. What happened in our client's case? 5 lakhs of IGST. Karnataka, the supplier was in Karnataka. The destination of goods was in Bengal. GST is a destination-based tax, so it will be IGST, right? What? The place of registration of supplier, Karnataka. Place of supply is the place where the goods are stopped. It's in West Bengal. Both are different states, IGST. The supplier charged IGST in his invoice, uploaded in GSTR1. But while uploading in GSTR1, by mistake, in place of supply, he put what? West Bengal or Karnataka by mistake. Which one should be the incorrect one? Karnataka, because goods to reach West Bengal, place of supply is West Bengal. It auto-populated in GSTR 2B of the recipient. And remark is POS outside the state. He has invoice IGST. He has paid IGST. Karnataka supplier has collected IGST, paid to the Karnataka government 50% revenue, Karnataka 50% revenue, central tax. But still, he will not be able to get input tax credit. It's contested. He had to eventually, he did not want to go into further litigation. He took amnesty scheme. Because interest and penalty was more than 5 lakhs of the tax demand. He was like, 5 lakh jaane do. These are procedural errors. If GSTAT was there today, we could have said with some bit of certainty and confidence that GSTAT would have, the last fact-finding authority would have listened to the particular case and we may have received but because there are many high court rulings which they say, as we have mentioned, that the substantive benefit should not be overshadowed by procedural defects. Supreme Court safari retreats. This case law, anything ringing in your ears, safari retreats, what is this? Sorry? Yeah, and or. Sir was also mentioning and or. Let's not go too deep, everyone knows the facts and all. Today, आज का दिन में अगर मैं अपना गोडाउन बनाता हूँ, आज का दिन में मैं अपना मॉल बनाता हूँ, ऑफिस नहीं गोडाउन जिसको रेंटल में देना है, पैसा कमाना है, प्रोडक्टिव एसेट. वी एम नॉट टॉकिंग अबाउट योर एडमिन ऑफिस वेयर यू आर गोइंग टू कंडक्ट बिजनेस सिटिंग थ्रू इट. नो, दैट्स स्टिल ऑन योर ओन अकाउंट. पूरा 100 पेज का जीएसटी का जो सुप्रीम कोर्ट का जजमेंट में 2 मुद्दा था. पहला मुद्दा क्या था? एंड और मतलब क्या हुआ? सेक्शन 17 सबसेक्शन 5 क्लॉज डी हैड की एक्सेप्शन क्लॉज में that any goods or services which are availed on your own account for construction of any movable property except plant or machinery. तो plant और machinery को plant word को use करके वो बोले क्या on functional test for a person who has a mall, he is earning money through that is his machinery. So you have to take a very wide view. The Supreme Court took a very wide view. He said कि उससे तो पैसा कमाता है, वो तो घर नहीं हो सकता है. How can it be on your own account? What does own account mean? Own account mean either you're using it as your business for your own activity or you're not using it for further account. Means you're not selling it, leasing it. Supreme Court क्या बोला? Sell नहीं कर रहा है, lease नहीं कर रहा है, license नहीं कर रहा है. तो on account कहाँ से हुआ? एक तो मुद्दा, 2 मुद्दा था. एक मुद्दा था and or. वो तो खत्म हो गया ना. वो तो पता है ना, retrospective amendment in section 17 subsection 5 clause D from 1st of July 2017. वो क्या हो गया? Plant and machinery हो गया. Plant and machinery का definition क्या है? Second explanation, last explanation to the clause. Any machinery, apparatus, equipment which is either fixed to the earth, etc. और उसमें 3 तो चीज माइनस करके रखी है. क्या माइनस करके रखी है? Any land or building, any telecommunication tower or any pipeline outside your factory. तो प्लांट, अब मॉल प्लांट एंड मशीनरी नहीं हो सकता है. वो एक पॉइंट से आपको रिलीफ नहीं मिलेगा, लेकिन दूसरा पॉइंट से हो सकता है रिलीफ मिले. दूसरा पॉइंट क्या है? ऑन ओन अकाउंट. सुप्रीम कोर्ट सेड सेकंड थिंग. Everyone knows the first thing very well. Second thing also Supreme Court said. Paragraph 32 of the order of the Supreme Court in Safari Retreats. What did it say? That on account कहाँ है sir ये? ये तो धंधा के लिए किया है. How can it be on his own account? If he is making a mall, he's sending out whatever, leasing out things. What is on your own account? On your own account ka definition, what did Supreme Court give? I'm not saying this is Supreme Court. Supreme Court's language. Construction is considered to be on your own account when the individual's personal use or facility is used for a person's own business. Conversely, construction will not be regarded on your own account when it is used by a builder for selling or for any commercial person for leasing licensing. ये तो leasing licensing के लिए था, rental कमा रहा था. How is it on your own account? This is for your business. So till date, इसके ऊपर में राहत हो सकता मिले, but you will never get relief on the ground level. You may have to contest. So again, what do I say again? Circular 192 याद है? CGST plus SGST plus IGST. उतना तक claim करिए. Don't utilize it. You will not be able to pay. You won't have to pay interest or any penalty even in the future. कल अगर मानिए कि एक और कोई मैंडेट आता है, कुछ भी और आता है, एक्सेट्रा एंड ऑल दैट, तो एक से तो आप हारे हुए हैं. प्लांट एंड मशीनरी तो वो प्रूव कर ही नहीं पाएंगे बिकॉज इट इज स्पेसिफिकली मेंशन 17.5D नाउ प्लांट एंड मशीनरी डेफिनेशन. बट ऑन योर ओन अकाउंट, हाउ इज दिस ऑन माय ओन अकाउंट? I'm earning money through it. It's through rental. This I'm not saying Supreme Court paragraph 32 is saying. Supreme Court law of the land article 141 of the Constitution of India. All courts need to follow that. So I can still take that, but I will not get relief now. Don't utilize that. Leasehold land construction. अच्छा, इसका definition पढ़ते 17.5D. Everyone knows this. Let's go through this. On his own, any goods or services both used for construction of immovable property on his own account. Even when used in course of furtherance of business. मतलब क्या हुआ? Goods and services मतलब क्या हुआ? बालू, सीमेंट, इंटीरियर आर्किटेक्चर एक्सेट्रा, राइट? कोई सोचता है गार्ड का सर्विस, कोई सोचता है लीज होल्ड राइट के लिए हम पैसा दिए उसका सर्विस. Those are indirect nexus. I'm talking about direct nexus right now. ईटा, बालू, चूना and interior architect services. वो तो एकदम ही बंद है, right? On my own account, I will, that's block credit. Clear है, right? But in case if I want to construct some property and I want to lease it out for rental, I take it from a particular landlord for 30 years lease. I give him how much? 10 crore rupees, 50 crore rupees, and GST also. This is a taxable transaction. GST मैं pay करता हूँ 9 crore रुपया. Will I be able to get input tax credit on the same? Will I get input tax credit on the same? I'm using that plot, I'm destroying it, demolishing it, I'm constructing it. When I'm constructing it, in connection to construction, goods and services on your own account, it is barred. तो इसका मतलब क्या हुआ? ब्रॉड व्यू क्या है? ब्रॉड व्यू है अपना सैंड, सीमेंट एक्सेट्रा, डायरेक्ट नेक्सेस. इनडायरेक्ट नेक्सेस क्या है? सिक्योरिटी गार्ड एजेंसी कि he protected that land. That also is a service availed in connection to construction of a property, which is on my own account. तो ऑन माई ओन अकाउंट तो हटा ही दिए. ऑन माई ओन अकाउंट तो हम लोग की तरफ है जो मैंने आपको बोला. तो व्हाट इज द नैरो व्यू? नैरो व्यू इज द डायरेक्ट नेक्सेस. ब्रॉड व्यू इज वेदर इट इज यूज्ड डायरेक्टली और इनडायरेक्टली. So we can still say that assignment of leasehold rights, these are very कहीं पे GST law में, if GST law as per section 16 subsection 1 wants to give credit, and if it bars credit only as certain aberrations, right, certain points, तो main मुद्दा तो उनका है intention to give credit. So why should we take the narrow view? We should take the broader view. What is the broader view? I have very distant connection. Leasehold rights for the construction, assignment, construction of property. This is not goods or services in direct connection with construction of my property. On my own account तो अलग ही. On my own account तो मैंने बताया ना कि on my own, if I am giving it for rental or sale or lease, Supreme Court is saying it is not on your own account. It is for business purpose. वो तो point अलग है. That is तो in our favor. I am talking about the other points related to this. What is a immovable property? अच्छा, can anyone tell me one more thing? ये पूरा हॉल का मैंने पेंट कराया है, 10 लाख रुपया लगा है. कॉस्ट ऑफ इंप्रूवमेंट में कैपिटलाइज करता हूं मैं, फिक्स्ड एसेट में डेप्रिसिएशन लेता हूं, या तो उसको रिपेयर मेंटेनेंस में खर्चा डालता हूं. इन विच केस और इन बोथ द केसेस वेदर आई विल बी एलिजिबल टू क्लेम इनपुट टैक्स क्रेडिट और नॉट, सेक्शन 17.5D इज स्टिल देयर. ऑन माय ओन अकाउंट दिस बिल्डिंग इज माइन. I have painted, which is a supply of service or goods in connection to a immovable property. In respect to construction का definition पता है ना सबको? Renovation, etc., alteration, all that. अभी अगर capitalize करते हैं तो input ले सकते हैं क्या? Because it's an immovable property. अगर खर्चा में डालते हैं 10 लाख रुपया ले सकते हैं, खर्चा में डालेंगे अकाउंटिंग स्टैंडर्ड सेक्शन 133 कंपनीज एक्ट, अकाउंटिंग स्टैंडर्ड अप्लाई करना है, सबको फॉलो करना है, वो वायलेशन होएगा कि नहीं होएगा? 10 लाख रुपया मैं रिपेयर मेंटेनेंस में डाल दिया, वेयर पेंटिंग मे नॉट एनहांस दिस यूटिलिटी, सो इट मे नॉट बिकम, चलो ठीक है पार्ट, बट इफ आई डू अ मेज़ानाइन फ्लोर, if I do some permanent fixture which will increase the rental value, which will increase the efficiency or the functionality of the place, then it should be capitalized. But वो GST law में लिखा हुआ है कि Companies Act में accounting standard का reference लेकर के है. GST law को क्या फर्क पड़ता है? There are many case laws. I'm not saying these case laws are saying. Department is saying that, oh, acha, this is as per Companies Act, so this is a violation, accounting standard violation. But it's like, sir, GST Act में कहाँ बोले? GST Act talks about the discretion of the assessee. Okay, 5 minutes? Okay, let's talk about this last point. In connection to this only, what is an immovable property? Bharti Airtel case. Now, we all know about Bharti Airtel case. What's an immovable property? उसमें क्या बोले थे? Telecommunication tower, anything anyone can recall? Nut bolt से tight करते हैं, उसको वैसे उठा करके कहीं और लेकर के nut bolt से डाल देंगे. There is no damage. There is no permanence to the land. There is no availment of extra benefit from the land. Plug and play. ये सब जो conditions, I am not saying, the Supreme Court judgment in Bharti Airtel is saying all these are not just for telecommunication tower. These all are for these also storage tank, mezzanine floor, prefabricated structure. श्रीजन और में 5-5 करोड़ का prefabricated structure बनता है nut bolt से, जो सीधा नीचे platform बनता है, PES जिसको बोलते हैं, right? उसमें जाता है वो. Whether we can claim input tax credit on that or not. There are many advanced rulings. They say yes, they say no. But what is the maxim? What should be the principle? The principle should be derived from here. Intention क्या है? Intention ये है कि उसको हटाना है कि वहीं पे रखना है. अरे भाई जब हम पूरा बनाते हैं 5 करोड़ का, तो the department can contest ना कि आप बनाए हो तो you want it to be a permanent structure. You want to remove it or what? We all are sure about few things, right? Movable, fixed asset, input tax credit we can claim or no? Yes, we can claim, right? Even if we capitalize, if it's a movable property, these share tables, etc., we can. So, हमारा मंशा क्या रहेगा? हमारा मंशा ये रहेगा कि जो चीज के ऊपर input claim कर रही है उसको हम goods का definition दे. Goods means movable. It's not an immovable property. हमारा मंशा ये रहेगा. But department will say no, it's an immovable property. So for movable goods, उसके लिए क्या करना है? Plug, play, no damage, और ये सब जो चीज functionality test, object of annexation, all these things, marketability, उठा करके बेच सकते हैं उसको. So these points, if I can extrapolate to my case, I can still claim input tax credit on these particular structures, storage tanks, prefabricated buildings, etc. But having said that, every case has its own facts and circumstance. So you should evaluate कि कितना damage होता है platform में, उसमें क्या, what is the permanence, what was the intention, what's the marketability of that, all of that needs to be taken into consideration. Okay, employee recoveries, I believe you guys can go through it. I believe it's already 4:30, I believe. I'll have to hand over the dais. But basically for canteen facilities, we all know, right, that employer and employee, they are related parties, right? So any related party without consideration is also a supply. But Schedule 3, it says that any supply or any activity received from the employee by the employer during employment, it is, no GST is applicable on that. So there are employee recoveries. 100 रुपया का थाली था, 30 रुपया मैंने उनसे लिया, 70 रुपया आई एम बेरिंग, तो 30 रुपया के ऊपर में एम्प्लॉई रिकवरी, उसके ऊपर टैक्स लगेगा कि नहीं लगेगा? लगेगा कि नहीं लगेगा? क्या बोलते हैं सर? इनपुट मिलेगा कि नहीं मिलेगा? अच्छा, इनका 150 जन का फैक्ट्री है, फैक्ट्रीज एक्ट में मैंडेट है कि मेश रखना है, किचन रखना है, खाना खिलाना है. अच्छा, फर्स्ट केस लेते हैं, 100 रुपया का थाली है और परक्विजिट है, 100 रुपया पूरा चीज अपना जेब से एम्प्लॉयर देता है, उसमें जीएसटी लगेगा कि नहीं लगेगा? उसमें जीएसटी लगेगा कि नहीं लगेगा? मैं नहीं बोल रहा हूं, ये सर्कुलर बोल रहा है, जीएसटी नहीं लगेगा, बिकॉज परक्विजिट्स आर अ पार्ट ऑफ द एम्प्लॉयमेंट कॉन्ट्रैक्ट. दूसरा चीज, परक्विजिट का मतलब होता है 0 रुपया मिलना, उसके अगेंस्ट में अगर कोई, मानिए ये सेकंड केस, ये मानिए फैक्ट्रीज एक्ट के अंदर में मैंडेट है 100 रुपया का थाली आपको देना है फैक्ट्रीज एक्ट में, इनपुट मिलेगा कि नहीं मिलेगा? जबकि ये पता है 17(5)(b फर्स्ट प्रोवाइजो के सेकंड प्रोवाइजो, इट सेज दैट इनपुट कैन नॉट बी क्लेम्ड ऑन फूड एंड बेवरेजेस अपार्ट फ्रॉम द केस वेयर यू डू इट फर्दर सप्लाई और वेदर इट इज मैंडेटेड अंडर लॉ इन्फोर्स। मिलेगा उसमें? मिलेगा। ये वाला केस में 30 रुपया रिकवरी हो रहा है, 70 रुपया जेब से दे रही है, 30 रुपया के ऊपर जीएसटी पेमेंट करना है कि नहीं करना है? करना है? वेरी गुड। ये सब ये नहीं बोल रहे हैं, जैसे आशीष जी करना है, मैं बोलेंगे नहीं करना है, वैसे ही करके एडवांस रूलिंग्स भी यही बोल रहे हैं। ये एडवांस रूलिंग्स बोलते हैं केसेस वेयर जीएसटी विल बी एप्लीकेबल, ये बोल रहे हैं वेयर इट इज नॉट एप्लीकेबल। नॉट एप्लीकेबल का मंशा क्या है? उन लोग बोलते हैं कि ये धंधा थोड़ी है इनका, ये तो एक तो सर्विस दे रही है, he is doing a service, he is not adding any cost to it, this is mandated under Factories Act, or he is not a service provider of food and beverage, so GST is not applicable. Other people, they are saying Kion India, your latest judgment, it is saying it is applicable. So आप लोग इसको देख लीजिए। सेकेंड चीज क्या है, अगर मानिए कि 100 रुपया 100 रुपीज में से 30 रुपीज कलेक्ट करते हैं और 100 रुपीज वो पेमेंट करते हैं, चलिए सप्लाई साइड भी 100, 30 रुपीज में कोई जन लोग बोलते हैं जीएसटी लगेगा, 100 रुपया मैं पेमेंट कर रहा हूं केटरर को, उसके ऊपर इंपुट मिलेगा कि नहीं मिलेगा? 30 पे जीएसटी चार्ज कर रही है तो मिलेगा कि नहीं मिलेगा? सर 30 पे चार्ज कर रही है तो क्या सर्विस होएगा मेरा? रेस्टोरेंट सर्विस, रेस्टोरेंट सर्विस के ऊपर में जीएसटी बार्ड है। और 70 रुपीज का अगर मानिए कि मैंडेट है फैक्ट्रीज एक्ट के अंदर में कि उसके ऊपर में जीएसटी चार्ज नहीं करना, तो उस पर इंपुट मिलेगा। लेकिन 30 रुपीज जो रिकवरी कर रही है वो सिर्फ मेश का नहीं है, रेस्टोरेंट सर्विस कैटेगराइज हो जाएगा, रेस्टोरेंट सर्विस में इंपुट इज बार्ड। तो अलग अलग चीज, टेलीफोन का, नोटिस पे का अलग अलग चीज है। नोटिस पे का ऑल्सो यू कैन सी 8 बजे के बाद में विमेन लोग को ऑफिस से मैं छोड़ता हूं, तो उसके लिए रेंटल कार में पेमेंट करता हूं, रेंटल कार के ऊपर में इज ब्लॉक रेट, राइट? वी कैन नॉट क्लेम, बट इफ इट इज मैंडेटेड अंडर अ लॉ इन फोर्स देन यू कैन क्लेम this Tamil Nadu advance AR ruling, you know, here with the notice pay also recovery, notice pay में your liquidation charges का जो आपका circular 178 it says no, because हम कोई भी आदमी को हायर करते हैं तो उससे कमाने के लिए हायर नहीं करते हैं, हमारा मेन चीज रहता है कि सर्विस दे। तो दिस इज जस्ट अ mere flow of consideration, it's not mere flow of money, it's not a consideration. So this is to dissuade the employees. Okay, thank you everyone for a very patient hearing. कोई भी questions है आपका तो please do ask me, or we can take it off the floor also because we've run out of time. And thank you so much for a patient hearing, and thank you for bearing with me. Thank you all. Thank you.
I request Mr. Puranjit Sil, CGM Finance from Senco Gold and the member of our Fiscal Affairs and Taxation Committee of the Bengal Chamber to please be on the dais and present a memento to Mr. Tulsian. Thank you. We will have the last panel discussion on preparation for GST 80 and next phase for compliance in GST. I request the moderator and the panelists to please be on the dais. Mr. Anindo Chatterjee, VP Finance, M Junction Services Limited. Mr. Obro Mojumdar, Advocate, Calcutta High Court. Mr. Gaurav Ghosh, Deputy General Manager, Indirect Taxation, Exide Industries Limited, and Mr. Rajoshi Dashgupta, Executive Director and Head of Indirect Taxes from Aquilaw. I request Mr. Chatterjee to please take the panel discussion forward.
Okay, thank you, Sharbani. A very good evening to all the ladies and gentlemen. It was a very interesting session, but now we are at 4:35, so almost 65 minutes late from when we were supposed to have started. And I can very well understand the increase in the traffic that increases exponentially after 5 p.m. So yesterday I was having a discussion with my panelists that I would give them an average of 3 minutes per question, and I'll have 5 questions for each of them. And considering that we are so late and we should not be too delayed to get ourselves into problem going back home, I would like to seek for a concession from 2 minutes, 3 minutes to 2 minutes on an average. And then I would leave the floor to the audience in case they would like to pose any questions to any of the panelists. Now I have an easy job. I know nothing, and I have with me very strong panelists from the industry, Mr. Ghosh, from the consultancy side, Mr. Dasgupta, and Mr. Mazumdar, who will take you to High Court and Supreme Court. Okay, and if you have any issues, and if you have a triology like this, the issue will get solved. Okay, with this, and all these things is for the industry. So let me start with the industry, Mr. Ghosh. So, and it's pertaining to GSTAT. We were, doing crystal ball gazing, ki 2 mahine mein aayega, 3 mahine mein aayega GSTAT, but now, yesterday it was clear that by end of this month, it will be in place. So with that, what were the issues that industry was facing in the absence of GSTAT? And I'll just club it so that you can, cover more with less time. Is the industry ready with the compliances required under GSTAT?
Yeah, so actually it's a 2 question. First of all, industry is actually depriving from the second level of appellate forum or appellate remedy. It's a 9th year of GST presently from 2017 onward. And we don't have the GSTAT facility available since the beginning of implementation of GST. Industry have lots of cases which they are waiting for making the pre-deposit, in fact 20%, because to avoid the recovery proceedings from the department, first they have made 10% to appellate forum, and then they have made again 10% for that circular for avoiding the recovery proceedings. So industry is very keen to have their GSTAT as early as possible, and they obviously are already ready with the all document, because in fact it's basically the same appeal, same documentation, just to make it strong, and I have to file and have to get that litigation be released. So to give the answer of these 2 questions at once, industry is very keen to have the GSTAT, and industry is ready to make the GSTAT facility accordance. Thank you.
Thank you, Mr. Ghosh. I come to Mr. Dasgupta. Like, how are you advising your clients to be GSTAT ready? And what are you, what would be your advice? How would they prioritize, their choice of the cases that they would need to file to GSTAT, whether it has to be on terms of the amount of the appeal or the, something relating to classification? What would be the priority that the client should, take?
Thank you. I should rather say good evening, everybody. And thank you, Bengal Chamber, for organizing such a fantastic GST income tax and symposium today. So just to, I'll keep it very short. So just to give you a perspective that one, I will answer your second question first and then I'll get back to the first question. One, so whatever you have done an appeal, so the current situation as everybody is doing because the GSTAT has not been formed, so people are paying a 10% and obtaining a stay. So irrespective, the first answer is irrespective of the demand, you need to file, or irrespective of the amount of demand or what the topic is, how important it is, or whichever, you have to file your appeals before the GSTAT, and there should not be any kind of discrimination in that. So every appeal has to be filed. If not filed, if you are aware that they have said that they would start accepting the filing of the appeals by the end of September, and they have extended the timeline till 30th June 2026. It's a very welcome move. So within that period, you need to have to close your filings, every filing, so that in case such filing is not being done, I am not into the condonation situation. So that means your whatever demand is there through an APL 04, that stands. So ideally this means that you are liable to pay the tax. So which is one. Number two is, the next part is how we are advising. We have been advising it from quite some time back, and it was just about to come in regarding that they have just announced of GSTAT being formed and all. So we have already been advising clients to start preparing the appeals, because it is just, the format has been specified, everything is there. So you need to have the appeals ready. More importantly, for whatever appeal it is the stage after which you are going to the High Court. So whatever documentation, whether primary or secondary, that documentation has to be foolproof when you are filing before GSTAT, because you don't want anything that tomorrow there might be a situation that there might be an order against you. That should not be on the want of documentation. That might be on a point of law where all your documents are there. So ensure, one, your appeal is filed on time. Number two, your documentation, whether primary, secondary, everything should form a part of your appeal or the written submission or whatever which is filed before the SISTAT, so that it forms a part of your paper book or written submission, whatever you are filing before the SISTAT.
Thank you, Mr. Dasgupta. I now come with a different question to Mr. Mazumdar. What are the additional, competencies and training required for tax professionals or consultants, to be able to adequately represent for GSTAT as against what the way they were representing in the department earlier?
Good evening, everyone. Good evening, Mr. Chatterjee and panelists, and good evening, all of you. The additional training for the representation before this GSTAT is that because the additional before the department, you have to prepare the paper-driven works. The paper has to be there, all the papers. Before the tribunal, before the High Court, only the question of law has to be decided. If you prepare an appeal against the tribunal order before the High Court, the High Court will look into only the question of law involved or not, whether there is a substantial question of law is there or not. They have to decide whether they have to answer the question, they have to frame the question of law, they have to answer the question either in favor of the assessee or in favor of the revenue. So we have to be very conscious of the fact that additional or whatever the document we have has to be placed before the tribunal. The tribunal is the last fact-finding authority, and we have to place the law also so that it can be, so we can prove that by facts, on the basis of the facts, law also be stated before the, argued before the tribunal. So then we can proceed, we can have a very strong case before the High Court. Then the question of law, whatever they frame, can be answered in favor of the assessee. So we have to be very conscious of the fact while drafting the appeal and as well as the preparation of the documents or the paper book, whatever the file before the tribunal. So it has to be, all the document has to be before the tribunal while deciding the issue before the tribunal. While the tribunal has deciding the issue, then there has to be all the law as well as the facts of the case. Then only the High Court can decide the question of law.
Thank you, Mr. Majumdar. So it's very clear that when you are going to file, or file with all the information that you need to give. After that, the chance is gone.
Because in tribunal, right now the Gestat says that the civil procedure code has to be followed. In the civil procedure code, there is a provision that discovery, inspection, cross-examination, you have to train with all the parameter is fixed by the civil procedure code. This is basically a quasi-judicial authority. Before one is the quasi-judicial authority, where one is the technical member and one should be the judicial member. So judicial member has to, we have to follow the civil procedure code. Then we have to maintain all the document as provided in the civil procedure code. We have to follow that procedure laid down in the civil procedure code. Then only with the High Court we have a better chance before the High Court only, or before the Supreme Court.
Thank you, Mr. Majumdar. I now pose another question. Now it will be one question which has two sides, one to be responded from the industry perspective and one from the consultant perspective. Once GSTAT is operational, what would be the issues and concerns, especially for high-stake demands? What do you foresee, Mr. Ghosh?
Yeah, thank you, sir. Since from yesterday night after the meeting, we understand that GSTAT will be operational by end of this September itself. So since nowadays, as on today, there is no GSTAT. Now we are almost there that after the 26, 27 days, there will be a GSTAT. So first of all, industry is fearing about that lots of cases will be filed against the GSTAT, maybe many lakhs of cases. Then how it will be triggered the proceedings. The appeal also to be filed in portal along with the uploading of document. The portal is new to us. How this portal will react for such a huge volume of quantum of document. And topmost thing that since nowadays GSTAT was not available, so peoples or industries are going to High Court for the regular issues like as 2A, 3B mismatches, EOA bill, IRN and GSTAT 1 mismatches. They are taking the shelter of Article 226, that is a writ. Now this all to become again on the GSTAT which has not been decided. So industry is very fearing about that. Other than the legal matter, the technical or I can say it is a procedural matter, that the mismatches, the reconciliation, how GSTAT will take care of it. Should it not happen that GSTAT is remanded back to the adjudicating authority, and then the matter is now starting from that 0 point of level, which is basically a loss of the time limit for the industry, loss of the working capital, because that 10 to 20% is being blocked since many years. The truck scissor cases, in fact, is a 100% blockage. In fact, it's a 200% blockage of the total GST charge to there. So these are the fearings of the industry, and these are the concern of the industry, which let's see how it is need to be taken care of in the upcoming GSTAT. Thank you.
Mr. Dasgupta, any thoughts on this?
Yeah. So One, Mr. Ghosh has said a very pertinent point on from the perspective of uploading in the portal. So that is one of the primary worry, that if a particular details are not being uploaded, which is subsequently provided in hard copy, many a times we have ideally seen from our experiences that those things are not considered, and we again have to go back, rearrange the documents at that point of time. And the biggest challenge that will come now is, you see, the CESTAT gets operational after 8.5 years. So even they are saying December, on a very positive and aspirational way, we are taking that it gets operational from 1st January 2026. Now, ideally, it will take this amount of time. So tomorrow, the case of 2017, 2018 will ideally come up, or even 2020 will come up on 28, 29, because today in CESTAT, we are hearing 2012-13 matters. So this comes on in this, what important things that is required? That means till that period of time you have to preserve those documents. One, you have to have all those documents and likewise documents in place, because you never know that what is those documents which might be required at that point of time when the hearing might come up. So that is one, again, the storage documentation. Number two, very importantly, please keep in mind that for place of supply matter, it is to be heard in Delhi, that is in the principal bench. Barring that, all other matters can be done in whichever place. So there might be a situation that a same there, even if there are multiple matters involved in the POS, and POA is one of them, which is heard in Delhi, you might have conflicting judgments of CESTAT on a similar matter. So there comes another point. Similarly, if you have pan-India presence, you have different CESTATs wherein you need to also have. So again, engaging councils, what kind of councils or consultants, whoever you are engaging, whether he is aware of the fact, how you would make travel. So there are lots of things you need to have in mind. Number 4, last but not the least, and there might be many, is that there might be delays on account of remanding certain matters back to original authority, because there are many places CESTAT would not decide, especially 3B cases, 3B2B cases, where there might be a situation where a department had denied because they feel that the certificate is not correct, for which I have appealed. They would again, though there would be time limit they might frame, but please make sure that you don't think that just because GSTAT has come in, things will again become hunky-dory. Another fact, a lot of things which are currently pending at High Court, because we have not gone, because GSTAT has not gone, we are. Now it is the right time for you to ideally, with the way the High Courts are functioning, the time limit that is being taken in High Courts in deciding the cases, perhaps it is the right time people to gauge out that whether do we withdraw the cases from High Court, put it to GSTAT, because then we again get another opportunity for another level of an appeal to go in case I withdraw it from the High Court. Correct, brother?
Files will be transferred to the GSTAT.
So in case
the procedure is there, the High Court will send all the files to the
GSTAT. So we get again another opportunity. So that is very important. You need to keep in mind, because something is pending in High Court. If some, let's say, a favorable order is not there, then what? Again division bench. Then, but again, if I remand, get it back to CESTAT, I get another level of appeal. So these are the things, I think these issues we need to now keep in mind in water.
Thank you. Thank you, Mr. Dasgupta. I'll come to Mr. Mazumdar. See, in essence, what I understand is industry is looking forward to GSTAT. However, there is an apprehension because of the huge backlog of the people waiting for GSTAT to get functional. So the backlog of the cases. And there is also a fear that because of the overwhelming volume that may get filed and that is likely to get filed in GSTATs, there will be likelihood that the GSTAT, for want of it can be sent back to the appellate authority, adjudicating authority, appeal authority. So, should the country also think of alternate settlement mechanism as it was there for income tax, which can, I would say, reduce the overall time frame for the resolution?
Yes, India should thinking about the settlement commission because of the reason earlier the income tax was provided the settlement commission in chapter 19A from section 245. It was very successful. That is why the litigation reduced like anything. Subsequently, I think in the IGST also provides section 11 to 26 provides for settlement commission. We should, the GST Council should think about that in CGST and SGST also there should be a settlement commission. In every state one settlement commission has to be set up. When the Supreme Court every day is saying that alternative dispute resolution has to be there, even in the private litigation as well in the litigation between any state authorities. So it is a concept is evolving. Every day that we are thinking about that the dispute has to be resolved as early as possible. It will reduce the cost of the industry. It will help the timing also. It will be reduced every day. When we are facing the difficulties that every day the High Court is overburdening the cases because of there is no GST tribunal. The High Court could not reach the matter. We have filed the petition in the month of December. Till that we are waiting for our matter to be listed. The matter can be taken up by the High Court. So this, in my opinion, we should think of, India should think about the settlement commission so that the dispute can be resolved as early as possible, and the procedure has been laid down in the Act also, that it should be conclusive. So if it is conclusive, then it will be helpful for the industry to act on it.
Thank you, Mr. Mazumdar. I think this is a matter that from the chamber side also we will take it up. So I now come to on the compliance side. Now, so far the crystal ball gazing on GSTAT, okay, we have covered certain aspects and we have to wait and see how things evolve. Now I come again to Mr. Ghosh on what are the key issues on the compliance side, on mitigating strategies in implementing pre-filled returns under the invoice matching system?
Yeah, this is a new system presently in operational but not being mandated, that invoice management system. We call it as the IMS. We all know about that. The actual objective of this system implemented by government is basically have a positive approach or nature and to take away all the forgery cases or all the mismatch cases. However, the infrastructure and the facilities and the rules and the procedures provided by the government is basically it's a maze for the industry. Why? I just want to highlight few points about this matter. Number one, there are lots of unaccounted credit notice allowed basically up to next before you filing that GST 990, I mean to say it's a 30th November for a financial year. So there are huge unaccounted credit notes industries are bearing. Credit note presently have no linkage with the original invoice or invoices. So how the industry will make the reconciliation of the unaccounted credit notes, and how, unless it is been reconciled, then how it is to be accepted or rejected the action to be taken. Second, there is no procedure for acceptance of a partial credit note or partial invoices. Because since credit note can be issued for multiple invoices, it may be there are chances or position that one credit note having of multiple invoices, I have to accept the partial of that credit note. Third one is that for a small industries like MSME, they don't have that kind of digital facilities or IT professionals or IT supports to equip to it with that in this invoice management system. And this is a very much big compliance cost to them. It may not be for a good big organization, but for the small scale industry. Next one is that IMS is having a manual activity. As far as my understanding is concerned, there is no API-based functionality provided by the department to upload in a bulk or accept or reject or whatever the thing actions to be taken in a bulk. So, and another very dangerous thing that the time limit allowed for IMS to the, say I am a recipient, so I have to file my 3B, that is on 28th of the next month. IMS also have that, opposite party have the time of 20th of the next month. So 14th morning, that 2B generated for me, I am working on filing that 2B or reconciling. At that point of time, one of my customer has rejected the credit note, say on 16th. So when what I have reconciled or we have reconciled, then whenever we will go for filing the 3B, we found that the auto-populated figure have won the rejection of credit note. The reasons may be whatever, maybe correctly, maybe incorrectly. So there, industry feels basically there should be a cut-off time for accepting or rejecting or action to be taken on the IMS, so that there should be a breathing time to the industry to file the correct 3B and go away with the amendments or anything others. And for the amendment, there is basically no amendment or no recourse allowed that if any credit note or invoice or whatever thing, if being accepted or rejected mistakenly, what the corrective action or recourse to be taken in future to make it correction. So these are the issues industries is facing or not actually apprehending, actually facing for implementing the IMS. Would require the good clarification through the circular or the procedural aspect from the department and the government. Thank you.
I now come to Rajoshi. With GSTR 3B now being automated, auto-populated, and gradually frozen against the GSTR 1 and 2B, what internal controls should businesses immediately implement to prevent any dispute in future?
Actually, for a 3B, everybody is quite aware of what are the things which 3B constitutes: input, output, post IMS. It already started auto-populating from the input perspective. It already started auto-populating things, and which are editable as well. So, from that perspective, from an input side, people are already aware and how things are to be done. In case they are putting higher value, there is a notice which comes automatically. So people are used to what, from an output perspective, from July onwards, theoretically what they have said that whatever GSTR 1 or the amended return which you will file, so on 15th, by 15th, that would be auto-populated in your GSTR 3B, which is ideally non-editable, but it is still, they are allowing it to be edit, but ideally for large industries, for them, this is not quite an issue because they have their MIS, their ERP, and all those systems are very strong. But for the smaller MSMEs, ideally, what you need to do where they have a lot of changes which happens, they need to ideally have their back-end system, especially from a perspective of raising invoice, having a proper MIS backup, and everything done timely, because other than that, what primarily will happen is there would be immediately, I think the notice will be issued is DRC 1B, I guess something. So whatever, 1C is for credit and 1B is for the output change. So these are the things I guess people need to be aware, and they should ideally work around their systems, their MIS, their ERP systems to ideally help them to avoid disputes.
Thank you, Rajoshi. Now I come to Mr. Mazumdar. With this new compliances coming into effect, what sort of litigation you see is likely to crop up?
We have already witnessed that in case of TRAN 1, TRAN 2, there's a many litigation is pending. The many litigation has been filed before the High Court. So there is some technical glitches also. In many cases, we have filed the application before the High Court that there is a technical glitch. Kindly some order to pass the order to rectify the mistakes and all that. Some of the cases we have seen that the SEC could not file the appeal because of the technical glitches. In this case also, I think there is a huge number of litigation will come before the High Court to resolve the issue. I think we are expecting that many litigation will come, but it will take some time to resolve. But I think there is possibility that litigation will come. In my opinion, it should come, and we'll get some orders from the High Court.
Thank you, Mr. Mazumdar. So I come now to the current situation. Now on the CNs, my question is to Mr. Ghosh. What are the issues you foresee on commercial CNs?
Thank you. Actually, we all know that yesterday's council meeting has allowed us an enormous, or we can say it's a broad area or clearance about the issuance of commercial credit notes. The main dispute of 15(3)(b) clauses fulfillment, that has been almost, I think, to be gone away once it is being amendment. What today morning, Mr. Vivek Jalan also been clarified that this is to be the recommendation of that. So commercial credit notes is basically, I just want to take the previous view. The commercial credit notes is basically a credit note having no linkage with the original invoices. It has not been decided earlier or in the part of the agreement, and also there is no requirement for reversing the credit for the opposite party. It is basically, say, somebody of our industry's dealer or somebody's dealer has made a good sales. Organization decided to give them some extra incentive, give them some extra benefits, they can pass away through the commercial credit note. Or what the example has given, that price has been reduced, so that to pass the benefit to the next to the customer, commercial credit note can be issued. We all know that there are Madras High Court judgment, as well as in case of Shivam Steels, and in case of the Delhi High Court judgment, Tushar product, that commercial credit note having no consistent supply of service, as well as there is no consideration flow from any one of the opposite parties. So it can easily be taken care of under the purview of the law without any litigation or any issues, and that can also to be carried forward. Business can continue that, so that it is it can be taken care of in a completion of the business. Thank you.
So I now come to Mr. Dasgupta. What is your take on the 56 GST Council amendments, as well as in case anti-profiteering comes in, how would companies prepare and tackle the current situation?
So I guess today the only thing everybody present in this in this hall, from yesterday 11 o'clock night till now, people are only reading 56 GST Council meeting updates, hearing hearing Finance Minister Nirmala Sitharaman and reading the updates and whichever comes in. So everybody knows more or less everything, but I just want to talk about very important things. One, to answer the second question first again. So they haven't reintroduced anti-profiteering in the GST reforms they have brought in GST they are calling 2.0. So anti-profiteering has not been reintroduced, one. Number two, there has been enormous rate reforms. They are now predominantly two rates, 5% and 18%, 28 and 12% has been done away with, all these things. Most important thing is, what companies now need to do is to go back and do quite a little bit of a deep dive. Because let's say for cars or automobile, there is a reduction of rate, but what the people have to consider is they have done away with the cess. So what will happen to the cess balance, which ideally would be lying as on 21st of September. Similarly, not by automobile, I'm talking about aerated water as well. So there are a lot of places now, when I talk about insurance, it has been exempted. So the entire cost of input, which was the entire input credit, which was earlier available, becomes a cost. So how do they rework on their model? So on 22nd of September, there might be a huge expectation of the industry that the price might just go down like this. It might not happen. So ideally, we need to keep a close watch on that, one. Number two is something amazing things that have happened on the ground of discounts. So they have made quite a brilliant clarification of post-sale discounts, wherein you need to connect to your original invoice, you need to have something written, all those things they have done away with. They have given a lot of benefits on account of the commercial credit notes and everything. So these are wonderful things. A brilliant amendment has come in for intermediary, and a lot of people will benefit out of that. They would now get a refund of their inputs because it will be treated as an export of service. Other changes for trade facilitation measures and all, GSTAT, as we have been discussing from the beginning. So there is an extreme welcome move on account of rate rationalization. There are wonderful changes which has brought in, but on the other side, we need to carefully see what is ideally, what comes out finally, and what might actually come out on and from 22nd of September. So we need to just wait and watch and see what's ahead of us. Thank you.
Thank you. Thank you, Mr. Dasgupta. So I now come to Mr. Majumdar. Now, GSTAT is likely to come in, will get operational, but it will take time. High Court is taking time to settle matters on the issues taken to High Court. And for an assessee, recovery proceedings have started. What would be your advice to that assessee? How is he going to tackle that situation?
We should know when the writ would lie before the High Court. Writ lies when there is a violation of principle of natural justice, if there is a jurisdiction error or any illegality, and if there is we are challenging any provisions of the Act, if there is a violation of Article 14, 19 or 21 of the Constitution, then the writ lies. In right now, there is no alternative remedy available for the assessee. So then we have to file a petition before the High Court by saying that there is no alternative remedy. So the only option left for us to file a writ petition. And before the writ petition, before the High Court, we can say that this is some recovery has been made without any basis, or the illegality happens, so that the only savior is the High Court. The High Court can entertain, we have to mention if there is a overburden with the cases because of the non-functional of GST tribunal. So we can mention before the court, this is the situation. The court is taking up the matters if you mention for urgent matters, for taking up the urgent matters. So only recourse to the assessee is only before you have to file a writ petition before the High Court.
That's a good guidance actually. Like that's the, for the time being, this is the only recourse that is there. File a writ and appeal for a urgent hearing and get some relief. I now come to this industry specific issues. First, let me come to Mr. Ghosh. He's from Excite, so my question is a bit directed towards energy sector. So my question to you is, how are you resolving the classification issues on supply of solar panel generating system?
Thank you, sir. So, yes, it's a very pertinent issue presently to the industries like us who are dealing with the renewable energy service devices. Solar is an emerging business nowadays in India, and the big market available there, everybody knows it. It's presently a very lovable subject, product for the open public as well. Now, solar, basically, we all know, having a two element. One is the combo or module of the solar, is consisting of multiple things, including the batteries, including the panel and so many else's charger. And another thing, its installation. So we all know that there is a notification, I think 24/2018, which is clarified that this thing to be rated as 70% for goods and 30% for service. Goods is having that time of 12%, 5%, and now and service was 18%. This was coming to 13.8%, somewhat like that. However, it is since combination of two, supply of goods and supply of services, both cannot be supplied at once. First of all, supply to be reached to the customer's house, then the installation services to be performed. So, authority or adjudication is basically expecting that everything should go at once and then it will be taken care of as a composite supply. That is actually not the case. Notification 1/2017, earlier it was there in serial number 234 that this is a solar power generating system. Later in 2021, it has been clarified as solar power generator. So it is the main point which is clear that it is supply one angle, in another angle is the supply of service. So you can make the supply of goods and then come for the installation of the service part. So, and it is also allowed that reduction rate. Presently it is, presently it is 12%, now it will again come to 5% after 22nd September by this 56 GST Council meeting. So we have faced multiple issues for this classification in lots of states, lots of tax seizures. My request is the department peoples as well as the industry adjudicating authorities that they have to have updated about the proper classification along with the reduction of rate and to give the immense to the, see the main sera of the supply, that whether there is an intention to take the shelter of the reduced rate or there is something other intention which is actually to be benefited to the customer. So that is the industry specific issue relating to energy device segment. Thank you.
Okay. Thank you, Mr. Ghosh. I'll pose the question to Mr. Dasgupta, but just for the information for the audience, I'll be posing it. The question is regarding Safari Retreat judgment, but that was represented by Mr. Mazumdar, okay, in the Supreme Court. So what is the latest situation, on the Safari Retreat judgment by the Supreme Court after it was adjudicated against the department? How is the situation now?
So as on date, the limbo continues, to put things into one simple line perspective. Because whatever the finance bill change has come, though not brought into act, even if it is there, the Supreme Court ideally quashing the departmental appeal. But one thing which is still there, even if tomorrow the change of plantor machinery to plantan machinery comes in, the functionality test which is being held by the Supreme Court remains to be true. So that remains constant. So, so that is a major relief for the assessee, one. Number two, now I go one step ahead because it is beyond. What you need to do is remove confusion and advise something to the SSC that they can avail the credit. So ideally you need to look it from a perspective of what is not allowable. It is something which you capitalize, which is immovable property, which is ideally construction, reconstruction, and which is ideally plant, and which is ideally not plantor, plantain, whatever, and what is not allowable. So ideally you need to first work around whether it is in relation to immovable property or not. One. Number two, whether it is in relation to construction, reconstruction or not. Whether in the correct spirit of law and not just doing for the sake of GST or something. Whether what I can capitalize, as Mr. Tulsian was saying, what I can capitalize, what I can charge off to revenue, that also works around with that. It is very important that you sit with the auditor of yours and work around on the definition of plantain machinery or plantor machinery so that I can correctly put things under plantor or plantain machinery so that ideally I can get those credits, which is number 4. Last but not the least is whatever now is left, whether that is a fightable situation or amount to be fought or amount not to be fought, because it might not be a situation tomorrow that your cost of litigation becomes more than what the credit you have in hand. So these are the things which you need to primarily work around and think, discuss and advise your clients so that whatever credit you avail are in the right direction. Even if there is a scope of proper interpretation, take the proper interpretation. Don't go overboard so that tomorrow, even if there is a dispute, you would not be able to defend it. So that's it.
Thank you. Thank you, Mr. Dasgupta. I now come to Mr. Mazumdar.
Subsequently, there is an amendment made by the central government, giving the retrospective effect. But in between the Union of India has filed the SLP before the Supreme Court also for review of the order passed by the Honorable Division Bench of the Supreme Court. But review application has been dismissed. I think 2-3 months back was dismissed by the Honorable Supreme Court.
So that concern.
It hasn't come yet, I guess. It has not been given effect.
They are following basically department. Department
might follow, but amendment it is still reads as plantor machinery as on date. As we are talking today also, it reads that they have proposed retrospective amendment. Finance Act has come to place in 29th March or something, but thereafter it is said from a date to be notified, that notification hasn't come.
Because of the reason they have filed review application before the Supreme Court. That is why it was not notified.
Because there has been a lot of push on this.
Pushback has happened. Okay. But Mr. Majumdar, as you say, the department has taken cognizance and.
Yes, some of the cases I have heard by one of my clients from Bangalore. He said that their department is issuing the notices that in view of the Supreme Court judgment and subsequent notification, they are referring the notification by saying that we are not allowing your whatever the credit available to you, we are not allowing you. We have to reverse the credit. Yeah, they have issued the show cause notices. No show cause notices. They have asked me to file a reply within certain period of time, but they are not adjudicated. They are still pending. All matters are pending.
All are pending.
That's an interesting bit. So I now come to Mr. Majumdar for his thoughts on Suncraft Energy judgment by Supreme Court.
This judgment actually passed by the division bench of our High Court. Subsequently, the SLP filed by the department it was basically dismissed on the ground of they have already settled the issue because of the I think some tax levy is very low. So that is why it was not proceeded with. Our division bench of the High Court, basically whatever the held by our division bench of the High Court has been upheld by the Supreme Court. Nothing has been, the issue has not been laid down by the Supreme Court. Whatever the issue has been laid down by the High Court, that has been followed. What happened in this case, I think Mr. Tulsian has already explained that what will be the effect of 16 to the eligibility. We have to follow, we have to comply with all the condition mentioned in section 16(2) of the Act. And only the exceptions are, if the exception is there, if it is fake invoice or place of business is not there, then only it can be disallowed. Nothing more. I think we have also challenged, for your information, that we have also challenged that virus of section 16(2)(c), it is still pending before the High Court. The state has filed, and many petition has been filed by the, it is pending because the state has filed affidavit, but central till date they have not filed any affidavit to that writ petition. We are waiting for the outcome. I think if the provision has been declared as read down or declared otherwise, then automatically everybody will get the benefit.
Thank you, Mr. Mazumdar. So we now come to the close of our discussion. We will take 3 questions, one each or with anyone. So just state your name and the company you represent, and you can also direct your question, or the panelists can decide.
Good evening. I'm Ashish Agrawal from M Junction. So my question is regarding IMS and rejection of credit notes. Recently we had an interaction with GSTN and we were informed that though there is no modus operandi for correction of the credit note rejected by mistake, they informed that that can be corrected by way of 9B in GSTR 1 by just making an amendment with the same figures. So there being no clarification in this respect, nothing that has come out from the council or the GSTN, just a verbal thing that has come. And though it is being followed, what legal backing do you see on that? To Gaurav Ghosh.
So, actually, I just would like to take this question. My point of concern was one of that also, that they have come with the amendment of GSTR 1A, and that is not clear to industry that how that could be applied. Say one of the customer has rejected a credit note which has been used for actually mitigating or negating the original invoices, because we all know that IRN cancellation having a 24 hours time. If for any reason there is a mistake apparent from the record found after 24 hours, so we all are using, I think, ERP system, so you all have no other option but to make the credit note to actually cancel the original invoices. So even if it has been communicated to the respective customer, the customer has not rejected, actually by default not taken action, so has automatically accepted the invoice but rejected the credit note. Now how to, this credit note is actually original, how to take care of this credit note through the 1A amendment? That is also a big concern, that is the thing he also wants to mention. So department or council should come with a proper clarification for this recourse of the originally done or correct action taken by the customer. That is our concern, that should be addressed without trouble.
Yeah, I have a question. In fact, I have 3 questions, but as advised by the moderator, I will stick to one question. I'm Shomik Das, I am representing Larsen and Toubro. So my question is to the panelists is, what is the role of the principal bench of the National Appellate Authority in impacting the consistency of ruling across the state? And what is your view on that? To Mr. Majumdar.
If there is a classification dispute, if there's one, I think one authority should classify, if the classification dispute there, I think if there is a state, every state has passed the order, one is contrary to the others, then it will be difficult for the litigant or the RTP to follow that. And you know, there is a judgment of the Honorable Supreme Court is there is that one particular tribunal or the High Court just passed any order or any, then it has to be followed by the all over India, if it is a central act. I think that is why they are basically following the only one tribunal, so decide the issue of the classification or valuation. As I know correctly, that is the reason, only reason behind that.
And to add to that, what will be the role of the GSTAT in coordination with the existing advanced authority to overcome the overlapping issues, jurisdiction overlap, you can say? Is there any role of the GSTAT in coordination with the existing advanced authority?
I think there is no, because of the reason that the Tribunal Act doesn't provide so. Basically, you know, there is the constitution of the tribunal is different. The constitution of like Income Tax Tribunal and the GSTAT. There is no link between the GSTAT and the other, whatever you are saying. Advanced ruling is, if the advanced ruling pass is only particular to the SEC only. If the tribunal pass, it will affect, it will binding on the quasi-judicial authority, whether it is appellate authority or the adjudicating authority. It is applicable to all. If the national tribunal decide any issue, it will be applicable to throughout the country. Thank you.
Last question.
Hello. Thank you, panelists. Myself, Sumit Gupta from Exide Industries. I have question like, what are the additional procedures in the GSTAT which were not available in the earlier GSTAT? Yeah, that's in my question for industry.
So actually, I think you want to understand what are the additional or differentiation between GSTAT and CSTAT. Actually, both is the tribunal. So few points can be addressed. I think what I read with the GSTAT rules recently passed in last April, that earlier CSTAT was a central quasi-judicial authority. Now GSTAT is basically a federal quasi-judicial authority consisting of both states and center. And the limit of acceptance of appeal is also extended from 50,000 to 2 lakh. The order amendment time limit has been reduced from 6 months to 3 months. The fees for filing the appeal earlier was 5,000 to 25,000. Now this is being amended as 1,000 per lakh, up to subject to maximum of 25,000. In case of no penal interest or amount cases, there will be a fixed 5,000. So these are the main cases or main difference. And one more important, all filings should be done on portal along with the certified copy of the order. And another one more case is that every appeal should be filed against every order in original, even if order in appeal has been passed against combining the multiple order in original. So these are the differences. What as of now I can recall. Thank you. Yeah, that is.
So with this, we come to the end of the session. First of all, thank you audience for staying back. Okay, but we kept our promise. We took just 1 hour, as scheduled. Over to Shravani. Shorban. No.
Thank you, sir. I request our chairperson, Mr. Vivek Jalan, to please be on the dais and do the honor. So I request to please present mementos on behalf of the chamber and from Amani Crafts. To Mr. Anindo Chatterjee, our moderator for the session. Mr. Obro Mojumdar. Mr. Gaurav Ghosh. and to Mr. Rajoshi Dasgupta. Thank you all for joining us today, and thank you for the support from Calcutta Tea Traders, Art Tulsian and Company, and of course our gift partner, Amani Crafts, and of course the knowledge partner, Tax Connect. Without their help, it would not have been possible.
Amani Craft gave all the...
Yes. Thank you everyone for joining us today. Yeah, one last group photo with all the speakers. Mr. Delia, please be on the Thank you, everyone.